Good morning, everyone. I'd like to call this meeting of the Public Accounts Committee to order. And first order of business is to open with a prayer, and for that I will call upon Mr. Isaac Rankin this morning to lead us in prayer.
Thank you, Mr. Chairman. Let us pray. Lord, we thank you for those who are present today. Thank you that we can come together as individuals with different gifts and sprints to pursue a common goal in this Public Accounts Committee hearing. I ask that you fill each heart with your presence and grant each mind clarity. Direct us in the way that we should go and make the path before us clear. May all we do be to the glory of your name. In Jesus' name I pray. Amen.
Thank you, Mr. Rankin, and good morning once again to members of the committee, the Auditor General's office, and to our witnesses here who are in the chamber this morning with us. They are the Financial Secretary and the Accountant General. I also see you have another senior member of your team here. Welcome, Ms. Walters. And I also want to recognize our parliamentary page this morning, Alejandro. First time, second time, because you were here yesterday, and I neglected to mention you and to welcome you as well. But glad you're here this morning as well. Welcome to you. This morning, we are here to discuss and to examine a report from the Auditor General. The title of the report, before I go forward, let me get everything right. We do have apologies from Ms. Heather Bodden, who is not able to be here this morning. Mr. Dwayne Seymour as well, although I suspect he might be coming at a later time. But in any event, we have apologies for them for this morning. So we are considering a report issued recently by the Auditor General titled Financial Reporting of the Cayman Islands Government General Report, 31 December 2021, issued in October 2022. So at this point, I will invite the Auditor General to introduce the report and make her opening comments.
Thank you, Mr. Chairman. Good morning to you, members of the committee, colleague officials, and the listening public. Thank you for the opportunity to make some opening remarks. As you mentioned, the report we're considering today is my office's 2021 General Report on the state of financial reporting in the Cayman Islands. The report was published in October and summarises the results of our financial audits of the 50 public sector entities in 2021. Financial reporting across the public sector entities continues to be strong, both in timeliness and in quality. I am pleased to report that as of today, only 5 of the 50 entity audits remain outstanding, and all 45 that have been completed were given a clean or unqualified audit opinion. This is a significant improvement over where Cayman was a decade ago. In my report, I make recommendations for the first time, and there are 7 of those. I recommend that now a stronger focus is given to the entire public sector account, where the audit for 2021 is yet to start, but where the most recent audit opinion I gave was an adverse one. The entire public sector account consolidates the finances of those 50 entity audits and brings in expenditure from the executive side of government, which is not included in the entity accounts. The Ministry of Finance should produce a roadmap to show how, over time, they plan to move this audit opinion from adverse, first to a qualified one, and then ultimately to an unqualified or clean opinion. I also recommend that the Ministry of Finance should provide clear financial leadership to all public bodies in financial matters that pervasively affect the Cayman Islands public services. 2021 was an election year with significant post-election reorganisation of ministries, and it was also a year where assets were revalued. Both of these matters led to issues and delays during the audits, particularly when dealing with the differences between ministries when transferring assets, liabilities and budgets. I make 2 recommendations regarding the implementation of the Public Authorities Act. Firstly, that those remaining statutory authorities and government companies that have not moved their staff onto civil service pay scales do so as required by the law. And secondly, that the financial implications of SAGC, statutory authorities and government companies, adopting civil service pension and healthcare benefits are fully costed before being implemented under Section 47(3) of the Act. The government should either provide a budget for these additional costs to each SAGC or take a policy decision to change that part of the Act if it is judged unaffordable. During 2021, the HSA were the first SAGC to move on this part of the Act in deciding to provide pension benefits equivalent to those of the civil service, and this was at a cost that amounted to £4 million. The remaining recommendations I make are for performance measures to be included in annual reports, some amendments to the Standards in Public Life Act, and that the government consider the value for money of maintaining the Sister Islands Affordable Housing Development Corporation as a separate entity, given that it has not built or sold any houses in the past 3 years, and the cost of the audit is the most significant cost in their financial statements. Mr. Chairman, this report summarises the results of all 2021 entity audits, and so it is something that involves every finance team across the public service and every single member of my team. And I have with me today Gabriel Nkube and Desmond Mateva, who worked on drafting this report with me. We stand ready to support the committee in any way we can during the hearing. Thank you.
Thank you, Auditor General, for those opening comments. We'll move directly now into the questioning of these witnesses. Financial Secretary, am I clear? Just want to make sure I'll be directing my questions to you, and if you need to assistance from your team, that you will invite them either to make a contribution or to respond to you, right?
Yes, thank you, Mr. Chairman.
All right. Thank you then, FS. I will move right into it. First off, thing that we wanted to raise you this morning, FS, is the timeliness of financial statements and the annual reports. And the Auditor General reported that 3 public bodies missed their statutory deadline for submitting financial statements, and 11 missed the statutory deadline for submitting annual reports. I believe it's probably fair to say, at least in terms of submitting of their financial statements, that did not meet the same sort of, if I might say, record that we might have had in prior years, where I think we've had situations where every member met the deadline, or there might have been one that did not. Can you speak to us and tell us what is the Ministry's view on the timeliness of submission of financial statements and annual reports to the Auditor General for audit?
Thank you, Mr. Chairman, and good morning. And for the record, as you usually request, my name is Kenneth Jefferson. I'm the Financial Secretary and Chief Officer in the Ministry of Finance and Economic Development. Mr. Chairman, the Minister of Finance is always encouraging ministries, portfolios, and offices to meet the deadlines, the deadline of submission of not only their financial statements, but their annual reports, which is 2 months after the financial year end. So it's the 28th of February is when the date that the agencies submit their annual reports. We strongly encourage that in the meetings that are held by the Deputy Governor with his chief officers, that frequently gets on the agenda as to the need to meet those that deadline. I think the slight deviation in the performance in terms of meeting, because I think it is a step backwards from previous year. Perhaps some of that can be attributed to the fact that with the changes following the election, there were added complications which may have given rise to some delays. But the view of the ministry is that we encourage the satisfaction, the meeting, the compliance with the deadline, and we stand ready to help ministries' portfolios to meet that deadline.
Okay. Thank you for that, FS. And in terms of the role of your ministry, can you tell us what is your role in providing leadership for more timely submissions of financial statements and annual reports? And can you tell me if there's anything that you see that you could be done to improve that timeliness and submission of reports in compliance with the PMFA?
One second, Mr. Chairman, please.
Sure.
Sorry, Mr. Chairman, I'm going to ask the Accountant General, if you don't mind,
Sure.
to address that. He was making some points to me, but I think it's best if it actually comes from him.
Okay. Accountant General.
Mr. Chairman, Matthew Tibbetts, Accountant General. Mr. Chairman, we're currently looking at the overall framework of budgeting and reporting for the government and seeing how we can improve the connecting parts between performance management and the Ministry of Finance. Currently, we have a decentralized model where CFOs report to their chief officer, and then obviously the chief officer to the deputy governor. So our current framework requires that the financial secretary asks the deputy governor to encourage the chief officers to put pressure on their CFOs to submit on time. The model that we're looking at going forward would potentially shift the performance management so that they'd have a reporting line to the financial secretary, which would allow him direct authority over their activities, which is something that's lacking right now. So, thank you.
Yeah.
So effectively then, fair to say you have responsibility, but really don't have the tools necessarily to ensure or to enforce the compliance in whatever way you might deem necessary.
Mr. Chairman, that's correct.
Yeah. Thank you. Mr. Chairman, I'd just like to add as well that they give credit to the Auditor General's office in that the role that they've played recently in conducting interim audits would help ministries' portfolios to meet that deadline. So we need to give credit to the Audit Office. But our role, Mr. Chairman, in finance is one of encouragement, one of lending support to CFOs in particular to meet their deadlines. Basically, technical accounting advice on areas that are perhaps problematic. We see that as our role, and up until the 2021 year end, the record has been fairly good in meeting the deadline, but we've suffered a bit of a setback in respect to the 2021 year.
Okay, FS, wanted to leave that there because I think I've exhausted that in terms of the timeliness this year, but want to talk now about the status of backlogged audits, because they still continue. That seems to me to still continue to be an issue in terms of a couple entities who seem to be continue to be seriously late in the completion of their audits. And the Auditor General's report points out that 7 public bodies, and that includes the EPS as well, for the 2021 financial year are ongoing or backlogged. A further 4 audits for 2020, 2 audits for 2019, 2 for 2018, and 1 for 2016-17 are outstanding. The Ministry of Health and Wellness has been backlogged since 2016-17, and the Airports Authority has been in backlog since 2019. So what that means is an entity like the Ministry of Health hasn't filed financial statements since year-end 2015. And in case of the Airports Authority, it's since 2018 that we haven't seen audited financial information. What are your concerns? What are the concerns and risks that arise from the backlogged audits for the Ministry of Health and Wellness and the Cayman Islands Airports Authority?
Thank you, Mr. Chairman, for your observations. And obviously, the Auditor General has said this morning, not a significant change to what you just said, that the backlog of 7, I think, has now become 5. But your point is valid. The risk, the concerns of any outstanding audit for a considerable period of time is evidenced by the fact that at an EPS level, the entire public sector level, the Auditor General has clearly said that it's just one of many factors that has led to an adverse opinion on the entire public sector set of financial statements. The fact that there are entities within the entire public sector, like the Ministry of Health, like the Airports Authority, like the Turtle Center, etc., who will have significant expenses, will have significant assets, will have significant liabilities. If the audits for those are incomplete, then the audit office is left with a question mark as to whether when you put all of the entities together, whether there's a misstatement or understatement of expenses, differences with assets. So it casts doubt. So the risk, to answer your question, Mr. Chairman, is that it casts doubt about the entire public sector and the fairness of the financial statements for the entire public sector. Those are the implications of audits being outstanding for quite some period of time. Another obvious one as well is that there's the increased risk of fraud as well. If many years elapse that the audits are not complete, staff could get complacent in those areas and think that there's no sort of real scrutiny because we've done this way for quite some time and we've gotten by. But the main practical implication would be at an entire public sector level. The opinion for that is left in doubt. Obviously, the public has an interest in, or should have an interest in, what's happening with how their dollars are spent, etc. So the public doesn't know what is going on in terms of the financial affairs of these entities that are listed here. So the public is left deficient as well.
Thank you, sir. Auditor General.
Thank you, Mr. Chairman. I just wanted to clarify that the backlog for 2021 is indeed now 7. Obviously, the report was written in October and we're now at the end of November. So it is now 5, but the report said 7 because that was the position when the report was written. So just wanted to clarify that and apologise that I didn't update in my opening remarks that we've now, in the intervening period, moved on with another 2. I also just wanted to mention that I have the 2016-17 file for the Ministry of Health with me now for final review. So I anticipate we'll be able to sign that one off fairly imminently too.
Okay, because one follow-up question I was going to ask you as a result of what you were saying was whether there was any impact on the 2 entities that I specifically mentioned who were, I guess, in most behind in the filing of their statements. So thank you for that clarity. FS.
Mr. Chairman?
Yes, sir.
If I could just briefly add to what the Financial Secretary mentioned a minute ago in regards to the concerns regarding outstanding audits. That is a concern of ours in that these audits have not been completed. Obviously, it's a few years now. And so something that we're doing in the Ministry of Finance is we're getting a service level agreement with internal audit to look back at all payments, and we're going to expand it to payroll as well for any transactions that have transpired in the last 5 years. And we want to particularly look at smaller amounts as well as larger amounts, just to do an extra check, just to make sure that we can have a bit more confidence, even though the audits haven't been finalized. But we'll be doing a bit extra checking, particularly because these audits have not been finalized. So we want to have that extra level of confidence. We want the public to know that we're actually doing things to ensure that we do have measures in place to try to mitigate any risk that's associated with these. And additionally, just to also expand on the point that the Financial Secretary raised in regards to the EPS accounts, while they are a bit outstanding, we do rely on the other ministries, Ministry of Health and CIA, completing their audits in order to get in order to approve our opinion, because that is a qualifying point. And so that is a delay, because the EPS accounts are actually just a consolidating set of accounts for the entire government. And so that relies on the other ministries finalizing their audits as well. Thank you, Mr. Chairman.
Well, I thank you for that clarity, because it is one of the issues I wanted to raise with you with regard to any work you might have been doing with internal audit to look into some of these entities and, you know, provide some scrutiny. So I do really appreciate that clarity, and that's a step, huge step in the right direction, I believe, sir. And so what is also your role in supporting these backlogged audits?
Mr. Chairman, my understanding with the Audit Office was that they have a plan for, particularly for the Ministry of Health, towards getting their accounts caught up. I believe you have a plan for all of the outstanding years now. Auditor General, I would pass that over to you for confirmation on that. And I believe CIAA has made some improvements as well recently, and I believe you have a plan for getting their backlog caught up as well. Mr. Chairman, I would pass that over to the Auditor General for her assessment.
Auditor General, you have anything to add?
Yes, yes, we do have a plan to address the backlog. At the moment, though, when we get into our busy audit season, we park the backlogged audits in preference and giving priority to those that are working towards the existing statutory deadline. I mean, there is a trade-off between timeliness and audit opinion. We could give disclaimed audit opinions on the Ministry of Health and the Airport Authority and get them up to date that way, but we've taken the view that it's better to spend time and get the issues resolved and try and get to a clean or at least a qualified opinion for those entities. As I say, we've made some changes within the office where we are going to put some focused resource on the backlog to try and clear that as quickly as possible.
Okay, thank you. Mr. Tibbetts?
Mr. Chairman, we appreciate the Audit Office and for them working with the ministries. Something that we would like to express is once we are caught up on these audits, we are okay with a disclaimer being given, because we want to put that emphasis and the responsibility on the ministries, the pressure on the ministries to complete their audits on time. Because it's easy for a ministry to say, oh, well, the audit hasn't been completed, but that's the Audit Office's fault. But we're a team and we have to work together on this. The Audit Office has to work with the ministry. So we want to put that pressure on the ministries going forward once the backlogs are caught up, so that they'll know that we are that serious to issue an adverse or a disclaimer of opinion if necessary, so that they follow through with the timeline as set out in the law. Because it's unfair to push it off an Audit Office to say, oh, the audit's not completed, because we work on this together. And so we want to place that pressure on the ministries to complete it on time. Thank you, Mr. Chairman.
I know this is my question then is a bit speculative, but just ask you your honest assessment. Do you think they have an appreciation for just how much this is impacting the rest of government in terms of its overall financial reporting?
Mr. Chairman, thank you, sir. Just to go back for a few seconds what you asked previously, and that is to say that the Ministry of Finance would obviously stand in a supportive role. Any help, assistance that we can give to any of the backlog entities, we're more than willing to do so. I do not believe that we've got any requests for any technical help that would aid the process. We haven't got any requests that I can recall of any significance, but we do stand ready to help if we can.
Just to add to that, there was a time previously where CIAA was even farther backlogged, at which time they reached out to us for assistance with the bank reconciliations, but recently we haven't been asked to assist. Additionally, on to your other question, Mr. Chairman, in regards to if they understand the impact of their delay. The current chief officer for the Ministry of Health was a former CFO, and that's actually exacerbated the problem, obviously, because her skills are now being focused on policy matters, which is part of the reason for the delay. And so while they fully understand it, they've had resourcing issues for the last few years. But I think at this point, resourcing issues are not sufficient explanation for the continued delay.
I think, Mr. Chairman, if I could just add to that quickly, sir. There are two fora at which the importance would be discussed. That is with the meetings that the Honorable Deputy Governor have with chief officers. This area is discussed, and it's known to chief officers that any delay in their accounts will impact the entire public sector. We've discussed that before. We've discussed the other reasons for an adverse opinion at the Deputy Governor's meeting with chief officers. The other forum, Mr. Chairman, would obviously be at the cabinet or caucus level, in which the Minister for Finance would discuss the entire public sector, and he would make it clear to his cabinet colleagues of the impact, and the responsible minister for these entities that are backlogged would obviously be present. So I think those are the two fora in which the importance would be discussed, as well as chief officers, CFOs can be in direct contact with the Ministry of Finance on the effects of their backlog.
Thank you, FS, and to Mr. Tibbetts for your responses to the questions. Now I want to move on to the next section of line of questioning, and that concerns the Public Authorities Act, Section 47. And for that, I'm going to turn things over to Ms. Catherine Wilkes, who will lead that line of questioning. Ms. Wilkes.
Thank you, Mr. Chair. Good morning, gentlemen. Financial Secretary, I will speak on the Public Authorities Act. The Auditor General has recommended that the government needs to consider the financial implications of Section 47 before further implementation. The Auditor General made a similar recommendation in the performance audit report titled Improving Financial Accountability and Transparency, Financial Management and Transparency in May 2021. We note that the management response to the earlier recommendations was that the government agreed and accepted the recommendation. However, it appears the government's response may have only been in relation to the Public Authorities Act as it relates to the salary scales, and did not extend to Section 47.3, the non-monetary benefits of pension and health care. So I was just wondering if you can say what the Ministry of Finance views are on the sufficiency of funding provided to the SAGCs for the implementation of Public Authorities Act as it relates again to the salary scales and the non-monetary benefits of pension and healthcare.
Okay, thank you, member. Mr. Chairman, through you, the answer is that there's no specific appropriation in the government's budget dedicated for what the honorable member just spoke to. There's no budget line that speaks to that at all. I can say that statutory authorities and government companies, a few of those have actually come forward to the cabinet requesting supplementary funding to cover the additional costs which they themselves had not budgeted for. So I'm aware of quite of a few that have requested supplementary funding in order to carry out the Public Authorities Law, Section 47. So the answer is there isn't a specific provision in the original appropriation law for 22 and 23, but cabinet papers have been presented very recently to seek cabinet's approval for supplementary funding. I think the points that the Auditor General make with respect to the fact that healthcare costs and pension costs, that hasn't been the focus of the statutory authority's attention. It is a valid one, and she makes mention in her report about the Health Services Authority going ahead with the pension element as opposed to the remuneration element. Those are valid concerns and points, Mr. Chairman, and the government, apart from what the Auditor General is suggesting in her report, the government has not actually made, to my knowledge, a detailed assessment as to what the cost of implementation will be. And so we have started to see the requests come in to Cabinet for assistance in meeting those obligations.
And so if I could just ask a supplementary, have they been able to deal with any of these requests in a positive way, and just dealing with them on a one-by-one basis as they come? Bear in mind, FS, I do appreciate that in these cases, the sums are likely to be quite substantial.
Thank you, Mr. Chairman. I'm struggling a bit. I could certainly research it and get back to the committee. I'm struggling a bit to answer definitively whether the Cabinet has actually approved the request thus far. They may have done. I simply can't say definitely yes or no right now, but I know the requests have been made. I will research and I'll come back to the committee.
That's fine, sir.
Okay.
Thank you, FS. I just have one other question, just in relation to the financial implications. Has government considered the full financial implications of implementing Section 47 if all SAGCs adopt the civil services pension and health benefits? So.
Thank you, Mr. Honourable Member. Mr. Chairman, through you, not to my knowledge that there has been any formal assessment done of the cost implications. I'm not aware of any such assessment. Mr. Chairman, as I said earlier, I think in partial answer to the member's question is we're beginning to see the inklings of it by the requests coming forward to Cabinet, but there has not been a wholesale request. If I want to be hard on the Minister of Finance, we could make the comment, well, that should be an initiative that the Ministry of Finance should undertake on behalf of the government.
Thank you, FS. I just have one follow-up question in relation to that. Could you confirm if that assessment takes place, would that then remove the need for all of the supplemental funding requests in relation to the non-monetary benefits that are not budgeted for in the budget period? To clarify, sorry, that are not indicated in the line items when the budget has been completed.
Thank you, Mr. Chairman. Mr. Chairman, if such an assessment is made, then obviously what that does is to establish the monetary value of any assistance that the government may have to render. It establishes what the cost of implementation to the statutory authorities will be. We have one more year, the 2023 year, left in the present budget period to deal with, for example, that would be the next opportunity to deal with the cost. I'm fairly certain that some authorities are going to be able to cope with the costs on their own, but quite a few are not going to be able to cope with it and are going to request assistance from government. And so the assessment in itself is not going to eliminate the need for help by the government. It's going to perhaps do quite the opposite. It's going to highlight that there is a continued need for government, or there's a need for government to assist the authorities, the statutory authorities and government companies in meeting these obligations. And certainly it would be a useful exercise for the next budget period, the financial years 24 and 25. It would be a useful exercise for that budget period and for government then to budget, if necessary, in 24 and 25, assistance that can be rendered to the authorities on this matter. I'll stop there, Mr. Chairman.
Thank you.
Any members, any other questions from members with this section? I believe also you'll be dealing with the non-compliance with the PMFA, section 11 and 12. Ms. Wilt, so please continue with your questioning.
Thank you, Mr. Chair. In relation to the non-compliance with the PMFA, section 11 and section 12, the Auditor General issued emphasis on matter for paragraphs for the public bodies because of their non-compliance with sections 11 and 12 of the Act. Section 11 of the Act, actually 11.5, states that when an exceptional circumstance occurs during a financial year, the Cabinet may authorize executive financial transactions for which no appropriation exists. The Auditor General noted that for most instances, Cabinet approval was obtained, but there were no exceptional circumstances to warrant the authorizations. Section 12 of the Act requires that the authorized executive financial transactions be included in a supplementary appropriation bill, and this be introduced in Parliament by the 31st of March of the year following the relevant financial year. The government did not introduce a supplementary appropriation bill for 2021 in Parliament by the 31st of March 2022 as required by the Act. In relation to that, I'm just curious if the Ministry of Finance's role in advising on section 11.5 requests could be elaborated on a bit, please. Thank you.
Okay. Thank you, Honourable Member. And Mr. Chairman, through you, the Public Management and Finance Act, as the member has stated, does allow a government of the day to deviate from the approved budget which the Parliament has passed in a prior period. And those deviations are possible on the different sets of circumstances, and we have different sections of the law, of the Act, that deal with those. The Section 11, subsection 5, is meant to be for genuine emergency purposes, where the government of the day could not, when it was formulating its budget for a year, could not foresee the need for such circumstances arising, and therefore didn't budget for it. But it's a genuine emergency, and it has to be dealt with, and dealt with quickly. That is what the Section 11.5 is meant to cover, genuine emergency situations. In the Ministry of Finance, we have, for the last year or so, we have pushed back on quite a number of requests from ministries and portfolios for the use of that section. And quite often we will send a comment back to the responsible ministry saying, making reference to the Auditor General's reports. And our pushback has been, you need to, ministry portfolio office, you need to demonstrate in the paper itself, in the cabinet paper, why you feel that the circumstance is a genuine emergency. You need to justify that. You need to state that explicitly in the paper, in the cabinet paper. So we have been giving that feedback consistently now for a number, for at least a year plus. The other avenue, Mr. Chairman, the other avenue of getting supplementaries for a government is a different section, a Section 12 of the Public Management and Finance Act. And that involves the government, the Minister for Finance, coming before Finance Committee and making the requests known to Finance Committee and seeking their approval. And that has been done in many instances, Mr. Chairman. So in the current 2022 financial year, yes, there have been approvals for supplementary expenditures on the Section 11.5. There have been, but the lion's share of the supplementaries were actually done on the Section 12, in which the government would come present an agenda to Finance Committee. In that meeting of Finance Committee, approval would be granted. If you give me a second, Mr. Chairman, I could indicate some of the numbers that we're speaking of. Okay, so, Mr. Chairman and honourable members, just as an indication for the current 2022 financial year, the Finance Committee, the Section 12 approvals total $63 million for this current year. And some of the big ticket items there were $15 million for the tourism stipend, $8 million for tertiary care at local and overseas institution for health care, another $16 million for the same purpose at a later date. Public health programs, investigation and treatment, $12 million. So the lion's share of the approvals by government, supplementary expenditures, have actually been in front of Finance Committee. The honourable member is quite right in that we, as a government, as a ministry, we need to take those approvals that have been made under Section 11.5 and 12 and put them conveniently into a supplementary appropriation bill. And the law, the Act requires that bill be presented back to Parliament by the 31st of March in a following year. And for the year 2021, that was not achieved. And so the Auditor General has a legitimate point in saying the act wasn't complied with, and she has drawn reference to that by adding in her audit opinion a paragraph that emphasizes that point. We hope to, in respect of 2021, also, Mr. Chairman, we need to do a supplementary appropriation bill for a second one for 2020. And we aim to do that either in the December meeting coming up in Parliament or shortly thereafter, but we do not intend to get caught out with missing the 31st of March deadline in the future. So I hope that answers the question. If there are follow-ons, then certainly I'd be happy to answer them.
Thank you. I do have a follow-up. I was just going to ask if you would be able to provide, maybe a little bit more background or reasoning on the reason why in that particular year it was filed late. And I noticed you just said that there was a second one for 2020. If you could also just share a little bit with us on if there was maybe some sort of unforeseen circumstance that may have caused the delays with filing them.
Thank you, Mr. Chairman, through you to the honourable member. Other than the sheer volume of work, Mr. Chairman, I can't think of a specific reason. Obviously, the frequency, the timing of meetings of the Parliament would impact that as well, and would have a bearing on whether that date is complied with. I think it's just the sheer volume of work to be done. I mean, we are obviously talking about a year in which a general election took place. We had a reorganization, as the Auditor General has said, of many ministries' portfolios and offices, which led to at least seven more entities coming on stream. It was just a really busy time, but we aim to address that and correct that as quickly as we can.
Thank you very much. Just to follow, to make a comment on what you were saying, it sounds like a lot of it is just timing, workload, capacity. So the other question that I had here was in relation to measures in place to ensure compliance. So barring that you don't have those circumstances to deal with, are there any measures in place to ensure that within your control as Ministry of Finance that you're able to file, within the requirements for Section 12? So 12.
Thank you, Mr. Chairman. Through you to the honourable member. It obviously is our knowledge. It's the fact that we are aware of the deadline would be the measure in place to prevent it from happening in the future. And we don't, obviously there isn't a general election planned for until 2025, so that certainly wouldn't be a factor going forward. And the fact also that we have the audit office making the reports and pointing that out would also help us to be reminded, if that were necessary, that the date need to be met. And we certainly will tell our Minister for Finance as well of the need to meet the date. We do have the supplementary bills prepared for the relevant years, Mr. Chairman. and we're either going to get it done, present them to the Parliament in this December sitting, or the one thereafter. But certainly we do not plan to go beyond the 31st of March 2023 for certainly the 22 year, and for all prior supplementary appropriation bills for the 21 year and the second one for 2020 to be dealt with. I would also add, Mr. Chairman, that it is an administrative tidy up exercise for the Parliament's knowledge, because when the bills are presented to the Parliament, part of the normal process is that those bills, the schedule to those bills will go back to Finance Committee, and it should be a quick process, relatively quick, because Finance Committee would have seen those same items approved a year earlier. So there should not be anything new to the committee, for example, in 2023, in respect of what's being presented for 2021. Because the committee, under the Section 12 process, would have approved those a year earlier. Statements, in respect of the Section 11.5 approvals that are done by Cabinet, the Parliament would have been informed of those items by means of honorable ministers and members making statements in the Parliament that they have carried out these approvals, these expenditures under Section 11.5. So Parliament would have previously been informed of both the Section 11.5 approvals and the Section 12s, and the supplementary appropriation bill. Its function is to put all of those approvals into one convenient document, the bill, and present the bill back to the House, to the Parliament for review. But there should not be anything new in those bills for the Parliament.
Thank you very much, Financial Secretary. I don't have any further questions.
Thank you, Ms. Bills. We're going to move on now to the topic of the revaluation of property, plant, and equipment. For that line of questioning, I will turn to Mr. Isaac Rankin, who will lead that line of discussion.
Thank you, Mr. Chair. The financial regulations require that all public bodies to do a revaluation of their property and plant and equipment every 5 years, as this ensures compliance with the international public sector accounting standards. The Lands and Survey had done a revaluation of the property in January 2021, but they were attributed delays in its completion that led to the submission of poor financial statements for the audit that needed to be significantly updated after submission. And then that created serious challenges to the completion of the audits by the statutory deadline of 30th of April 2022. And the Auditor General did make note that these delays were in part due to the lack of the leadership by the Ministry of Finance and Economic Development. And she also noted that this ministry should have driven this process and have it completed before the financial audits commenced. And she also made some recommendations. The question is, what is the guidance and support issued by the Ministry of Finance with regards to revaluation of property, plant, and equipment?
Thank you, Mr. Chairman. To answer the honourable member's question, I'm going to ask the Accountant General to please address that one.
Mr. Chairman, through you. The Land Survey Department completed the valuations in November 2021. So the valuations weren't by any means late, they were ahead of time. However, in 2021, we kind of had a perfect storm in that we had the reshuffle of ministries. And so the ownership of assets and the recognizing and the transfer of those assets in the system caused delays as obviously CFOs were quite busy trying to settle into their new ministries and then fully understand what assets were transferred to them and so on, and for the Lands and Survey Department to fully understand what assets belong to who. So there was a bit of a challenge in 2021 year, and I appreciate the Auditor General's recommendation, and it gives us a clear steer that in future we actually should do it a year in advance of when we actually need it, to ensure that it's actually, we have sufficient time to ensure that the changes are introduced prior to, far in advance, I guess, of the financial reporting period. So our role in the revaluation, we, every 5 years, the law requires, the standards require 3 to 5 years. So currently we did it, I think, at a 4.5 year period. We did the revaluation, and that allowed us to provide a new date. So we do this as a centralized thing to ensure it's carried out for the entire government. In the past, we found that when we left it to individual ministries and entities, and that is those in the statutory authorities and government companies, we found it was only done randomly and not on a consistent basis. So we took the lead back in 2016, I believe it was the first time we did it. We took the lead, and we did it centrally. We covered the costs and everything of the evaluations to ensure it happens. The first time around, we had some statutory authorities and government companies that kind of held out, such as Ports Authority, who said, well, we have very unique things and where we want to do our own evaluations. But this time around, we took a stronger lead on it and said, no, we're going to do everything centrally, because in 2016, that resulted in further delays to the evaluation process. So we wanted to ensure that we took everything centrally and got everything done within the time frame. And Lands and Survey did do a very good job of completing it by November 2021. What Lands and Survey has advised is that the issues they saw were that CFOs, obviously being, the timing being November of having the reports finalized, leading into December, and the period where so many people are off on leave and so on, and then being thrown into the reporting process immediately afterwards. So the reporting process is January and February, and then the audit starts March till April. It didn't give CFOs sufficient time to review and ensure the accuracy of their evaluations. When I say accuracy, ensure that the proper ownership was transferred to them coming out of the reshuffle. And so this resulted in CFOs not being able to properly evaluate these assessments and the completeness of their registers until March or April of 2022. As I said, it was kind of a perfect storm in 2021 with the reshuffle as well as the reevaluation at the same time. And so from this, we're going to take a different approach next time, do it farther in advance so that we won't result in this kind of perfect storm again, so that we can actually front load it so we can get the evaluations done before any kind of reshuffles. Because the assets, the values won't change as a result of reshuffle. It's just the ownership transfers would have to be carried out then following any kind of reshuffle. So there are some lessons learned by the ministry here, and we're happy to take them on board and improve the process going forward.
Thank you for that very comprehensive answer, because it answered some of the other follow-up questions that I was going to ask. But just to summarize, with your lessons learned and barring any unforeseen circumstances, the next audit will be completed in a timely manner.
Mr. Chairman, through you. Yeah, we will definitely take we did a proactive approach this time, but we would like to actually probably start the process a year earlier on. And that's earlier than it needs to be based on the standards. However, because of the result we saw here, we don't want to have this knock on to another issue and end up in a situation where people aren't getting their accounts signed off in time and so on. So we've learned that lesson. We want to make sure we probably start about a year earlier than we normally would. So probably year 4 instead of 4.5 or 3.5 year period. So because it does take a long period of time considering the number of properties the government has. So it does take quite a substantial amount of time to get the valuations completed. So I think this time around we'll start at year 3.5 or 4 to ensure that that 6-month window of completing evaluations, we can manage the process. CFOs will have time to digest it and sift through it to ensure its accuracy. So
Thank you, sir, for that commitment. I have no further questions, Mr. Chairman, on that topic.
Thank you, Mr. Rankin. I just think a little bit here, just out of curiosity, how many sort of entities or valuations are they undertaking? Just give a flavor for the magnitude of the task.
Mr. Chairman, I actually brought the report with me, but I'm having trouble locating it right now. It has the full list of all properties we evaluated. I don't recall the exact number, but there's 70-something agencies, and they all, most of them have numerous assets, including lands and survey, which would have the Crown properties, and that list is extensive. It's over 600 was the last number I remember. So it's quite a number of valuations, and it's quite expensive as well. It's a few $100,000 for us to complete the valuations. But we take that on the Ministry of Finance as us trying to take on the leadership role of coordinating this effort. I can get the exact number for you, Mr. Chairman.
And then I don't want to, what happens with the roads infrastructure? Are they valued as well and included in government accounts?
Mr. Chairman, that's an issue we're still working on. The National Roads Authority works with Lands and Survey on that valuation. However, the Audit Office has expressed some concerns and want further documentation in regards to the methodology to ensure that it's a complete methodology. And so the National Roads Authority, they are the entity who are the experts in roads and evaluating roads. So their assessment includes the actual roads as well as what they call the road furniture, which is all the signage, sidewalks, and everything. And so then they have to go through a process of determining the cost of the land, the cost of the different layers of the road, and then the furniture as well. And so it's quite an extensive process, but it's some more work we need to do with National Roads Authority to provide the Audit Office with a detailed methodology of their approach to the valuation to ensure that it meets their requirements. So it is quite challenging, but the National Roads Authority is who works with Lands and Survey on that.
Okay, thanks very much. That gives me a good indication as to the complexity of it. Thank you. Any other questions from members at this point? We're going to turn next to the financial results of audited public bodies and also talk about the tabling of annual reports. And Ms. Barbara Connolly is going to lead those lines of questionings. Ms. Connolly?
Thank you, Mr. Chairman. Through you to our witnesses, or our witness. In 2021, 16 out of 19 core government entities audited had recorded surpluses. Our understanding is that surpluses should be paid back to the Treasury. Can you say what are the requirements and processes for core government entities to pay back surpluses?
Thank you, Mr. Chairman. Mr. Chairman, through you to the honourable member, the Public Management and Finance Act dictates that a ministry portfolio or office that makes a surplus at the end of its financial year, the law dictates that that surplus essentially be paid back to the government. And I'm conscious of the fact that, you know, a member of the listening public might not quite understand that. But what it essentially means is that the surplus, it's best to explain it by saying the surplus will translate into a certain amount of dollar in a bank account. And each ministry portfolio has its own bank account. In fact, several bank accounts. And the transfer simply means that the individual ministry portfolio is to take money from its bank account and put it back into a bank account that's maintained, kept for the cabinet or for the executive or at a parent level. So it's a internal transfer within our books, and that is how the surplus is meant to be. Is the best way of explaining it. The surplus is meant to be returned to the government. The Public Management and Finance Act specifies that if a ministerial portfolio wishes to retain any surplus that it has made for a year, the Act says that that ministry portfolio or office has to seek the permission of the Minister of Finance to keep the surplus for itself. Mr. Chairman, it's infrequent. We don't get many requests to the Minister for Finance to retain surpluses. There are a few, but by and large, it's more the exception than the rule. And I'll be obviously completely honest with the committee by saying that although the law requires, the Act requires that that actually takes place, the transfer of surpluses to cabinet. Thus far, we have not insisted. Have we gone and done it? Yeah, sorry, I correct that, Mr. Chairman. Recently, the Ministry of Finance has actually essentially gone into accounts, into bank accounts from ministries and portfolios, and stripped out their surpluses, unless they asked to retain it, stripped out their surpluses and put them back to the cabinet.
Sorry, Mr. Chairman, just to add to that, if I could, I don't want the public to think that these are funds sitting in ministries and these funds are just sitting there. The Treasury Department invests all of these funds, whether it's being held by a ministry or if it's being held centrally in the Treasury Department. So we're investing these funds daily, and well, not in a daily term, but over a term. And so we're still getting a return on this investment, despite it being held in ministries. So the government is still making money on these funds. It's just where within the government it's allocated out to right now. And so this is then bringing the funds back into government, but we still invest, despite the fact that the ministry may have access to the funds at the time. We invest all of those in fixed deposits for anywhere between 3 months and a year period of time. And probably just to put this in perspective, in total we have over 100 bank accounts in government. And so those funds are all pooled in regards to our investments though. So it's a situation where we're not just letting funds sit idly by, we're actually investing and getting a reasonable return on them. Thank you, Mr. Chairman.
And if I could just ask a supplementary too with regard to it. I know what the law says with regard to the surpluses, but what happens when a ministry or a portfolio actually has a deficit for the year?
Thank you, Mr. Chairman. Well, first of all, the Act does specify that ministries and portfolios offices do not make a deficit. They should break even at worst. But if a deficit does occur, and it could occur for reasons other than the normal day-to-day activities of a ministry portfolio, it might occur because of revaluation of assets, as an example. So if a deficit does occur, it's not the end of the world for that ministry, portfolio, or office, in the sense that the funding is still available because the government as a whole has positive cash balances, and certainly the ministry in question, the portfolio or office in question, would let it be known to the government that there was a deficit. And we're obviously talking about, into the following year after the deficit has happened. And in that new year, the ministry portfolio office would be conducting activities for that new year, for which it would be earning revenue from the cabinet, and so revenues for that new year would be going into its bank account. So it's not as though the account is, its bank account is in overdraft for a long period of time. I hope that answers your question, Mr. Chairman.
Yeah, it does, but I guess more for information purposes as well.
Mm-hmm.
I understand, I mean, and I know from time to time that they do end up a year with a deficit. But would they be allowed to recover that in future years, or do they just continue to carrying forward that that deficit? And in line with that, would there be could there be a circumstance where they do end up with a deficit and they might have to seek funding to cover that deficit?
Mr. Chairman, there are a few different remedies for this kind of situation. Generally, you'd have a supplemental budget which would provide them with additional funds to cover any additional expenditure. However, that is to be done in advance. It should not be done after the fact. However, if we end up in a situation where we've crossed the year end now and we're $100,000 in deficit, we would have to have a situation where we provide them with an equity injection then to bring them back up, to top them back up, so they wouldn't operate in a deficit situation going forward. But generally, it should always be done in advance through a supplemental budget if we see an additional expenditure coming that wasn't expected. Thank you.
Through you, Mr. Chairman, my next question is, can you indicate the number of entities that recorded surpluses in 2021, and how many have actually given back the surpluses to Treasury?
So, Mr. Chairman, I do know that through you, Mr. Chairman, I do know that the Auditor General's report has an exhibit that answers that question. So, Mr. Chairman, thank you. On page 53 of the Auditor General's report, Exhibit 20, is a listing of the various entities in government for a 5-year period, actually, ending in 2021. And we see that there are three entities that actually had a deficit for 2021, and all of the others had surpluses for 2021. And so if there are 24 ministries, portfolios, and offices, and 3 had deficits, it's approximately 21 then that had surpluses for 2021. One additional second, Mr. Chairman. Did we then take that all back? Did they take that as well?
We requested all back, so I'm getting a status update on where we are collecting it back.
Okay. So, Mr. Chairman, thank you. Just following on from what we were discussing earlier, those 21 surpluses, entities with surpluses, would be required to return those to the government. And the Accountant General has just said that he's getting a status update as to whether the surpluses from those 21 entities have all now been taken back into the parent, the cabinet.
Okay, I have one other question relating to the government entities. So if an entity requests that they retain their surplus, do they give a justification as to why they need that surplus?
Thank you, Mr. Chairman. Honourable member, as I said earlier, it's more infrequent than the norm, but we oftentimes in finance we question why. So the initial request need not necessarily be very expansive by the requesting agency. We then say, well, why do you wish to keep the surplus? And so there's a continued back and forth. Usually the answer is that there's a great need for cash in the subsequent year as to why they wish to retain the surplus. They have expenses that they didn't foresee taking place, and so they need to retain the surplus for use. So the surplus actually translates then into cash that they're able to retain and to use for their purpose. But usually it is, we have unforeseen expenditures coming up that we would like to address. In addition to that, another reason often given is, well, we've had deficits in the past, and so we simply want to catch up with those deficits by retaining surpluses. But it's usually to do with expenditure levels.
Mr. Chairman, through you, just to add to that, the law requires that the Minister of Finance approves anyone holding back their surpluses. So they would have to be at a level that the Minister of Finance would satisfy himself that it's a justifiable reason for them to hold the surpluses. So we would provide as much information as possible to the minister, and then he makes a final decision as to whether that's a reasonable reason for holding the surpluses. Thank you.
Thank you for that explanation. Moving on now to SAGCs. We also noted that 17 out of 24 SAGCs recorded surpluses, 6 recorded losses, and 1 broke even. 5 SAGCs recorded that most significant surpluses: the Health Services Authority, the Port Authority of the Cayman Islands, the Cayman Islands Monetary Authority, the Segregated Insurance Fund, and the Civil Aviation Authority. Can you indicate the number of SAGCs that recorded surpluses in 2021 that have paid dividends to Treasury?
Sorry, Mr. Chairman, I'm just trying to find the relevant section within the Auditor General's report. Okay. So, Mr. Chairman, thank you for the time delay. The number of statutory authorities and government companies, the number has not changed following the election, and that number is 26 statutory authorities and government companies. And on page 57 of the Auditor General's report, again we have a period of time shown there, and in respect of the 2021 year, there's a recorded deficit for Cayman Airways, which is 1, the Cultural Foundation, 2, the Turtle Center, 3, Housing Trust, 4, NRA, 5, Pension Board, minimal, 6, and the Water Authority, 7. So 7, from what I can see, recorded had deficits. The other 19 had surpluses. Mr. Chairman, the precise number of SAGCs returning a dividend to government, I don't have that to hand, but we can certainly get that for the committee. But I can say that, Mr. Chairman, the authorities that do consistently provide a dividend to the government would certainly be the stock exchange, would be one that year after year provides a dividend to the government, and also the Civil Aviation Authority also provides consistently year after year a dividend to the government, and the Monetary Authority as well will provide a return to the government after securing the level of provisioning that it needs to have in its currency operations, etc. That also occurs as well. Those are the main ones, but we will certainly get a precise listing for the committee. But stock exchange and the Civil Aviation Authority are the consistent dividend providers to the government year after year.
Thank you. FS, you mentioned the government entities and their deficits. Would that also apply to the public bodies, the SAGCs as well? Because the question is what factors that lead to these deficits in terms of the SAGCs, these that are stated on page 53 of the Auditor General's report.
So, Mr. Chairman, through you, could I ask the honourable member to elaborate a bit more? I'm not clear the question.
Okay, it's for the public bodies reporting deficits. Can you indicate what the factors are that lead to these deficits in the SAGCs?
Thank you, Mr. Chairman. Mr. Chairman, I would say it's certainly for commercial reasons, and it's not we do have. Let's just address for the moment the dividend aspect. We do have a formula that dictates the statutory authorities and government companies the surplus or deficit that they would the surplus that they would make, whether any of that has to be given back to the government. There's a formula for that. But in terms of the factors that would cause a statutory authority or a government company to make a deficit as opposed to a surplus, they would largely, I would think they would largely be commercial. So if we take Cayman Airways as an example, which is the very first one shown on page 57 with a deficit, it would be their normal course of operations that their revenues didn't match their expenditures, and certainly it is the case that the government's relationship with these entities, in terms of many of these will provide services to the government for which the government would pay those authorities, and that relationship would get regarded as revenue for the statutory authority. So I can't state that the reason for the deficit in any of these SAGCs would be because of a lack of government involvement. It would be more non-government reasons, the transactions that the authorities would undertake that would cause them to suffer a deficit.
FS, if you don't mind if I press a little more on this, and I look through the list, and there's only one that really jumps out at me, and that's the Water Authority, which seemed, consistently year after year to have had surplus, but then in 2021, boom, we see a substantial deficit for that year. Can you shed any light on that?
Yes, thank you, Mr. Chairman. Yes, it definitely looks very odd on page 57. I think the Auditor General in her report actually gave the reason for that, and I'm relying on memory now because the audit office report is 57 or 60 plus pages, but I seem to remember that it arose because of a remeasurement, and perhaps the AG, the Auditor General, can confirm or deny or clarify. It seems to, I remember reading that it was as a result of a remeasurement, a reassessment of its healthcare liability.
Yes, that's absolutely correct, Financial Secretary. Through you, Mr. Chairman, the middle of page 2 covers it first, where we summarise. So at the end of the third paragraph, the deficit for the Water Authority was primarily due to the remeasurement of the post-retirement employee healthcare liability. The Water Authority's liability increased by 90% to 46.2 million in 2021.
Okay, I found that. Thank you very much.
So, Mr. Chairman, obviously that we would not expect that to recur at that level going forward in the future.
Thank you, sir.
One last question through you, Mr. Chairman. Does the Minister of Finance have any concerns about the public bodies recording year-on-year deficits and its role in and what is your role in assisting them to address these their financial performance?
Thank you, Mr. Chairman, and I thank the honourable member for that question. Yes, there is an obvious and clear concern if the deficit continues, continuously, because obviously what is going to be ultimately required is that public funds via the government are going to be used to sustain the operations, and it's not normally the best use of the public funds there are exceptions, Mr. Chairman, but it's not generally good use for the public's funds to be used to sustain a deficit-making operation continuously. And so the role of the Ministry of Finance is to, first of all, to inform the Minister for Finance that it is taking place. It is to suggest to the Minister for Finance that action needs to be taken in order to correct that. And so two examples, Mr. Chairman, obviously come to mind. The Auditor General mentions in her report the Sister Islands Affordable Housing Committee, in which there is not the best use of public funds, in the sense that it hasn't carried out any activities, hasn't built any homes, etc., but yet there are costs being incurred. And so the question is, should we continue on with that organization? The other one that comes to mind, Mr. Chairman, is the Cayman Islands Development Bank, and which has, over the years, public funds have been channeled to the development bank, and as normal, those funds have been loaned out. But a substantial portion of those funds that have been loaned out are now impaired and compromised, and the provisioning for those are quite heavy. And so the development bank is not operating at the level that it possibly could operate. And so the Minister for Finance has indicated that he would like a review of the activities of the Cayman Islands Development Bank, and there's a regional development body that has been asked to look at how the Cayman Islands Development Bank could pursue other activities more akin to a development bank that would lead to a better financial standing for the bank. And so that is to take place. So to answer the honourable member's question in summary, it would be the Minister of Finance would advise the Minister for Finance that the losses, the deficits are ongoing, and it is not the best use of the public's funds to continue to go into a deficit-making organization. There are exceptions, obviously, Mr. Chairman, to that, particularly if it's in the realm of public health, for example, would be an area where it perhaps would be acceptable for those funds to be used if the organization was in a deficit situation for a long period of time.
Okay, I'm moving on now to the tabling of annual reports. Public bodies are required under the PMFA to lay their annual report containing the financial statements and audit opinion in the House of Parliament no later than 5 months after the end of the year. This is the pivotal stop that completes the accountability chain. Despite some recent improvements, there continues to be a delay in tabling financial statements and associated annual reports in the House of Parliament. This is not the first time that the Auditor General has commented on this. The government has previously stated that it would resolve this issue by May 2022. My question is, what are the reasons for current delays in the tabling of annual reports after May 2022 implementation date?
Thank you, Mr. Chairman. Through you to the honourable member, yes, we accept the validity of the point that the honourable member and the Auditor General has raised, and the report certainly does a good job at Appendix A in the report, spanning from page 34 through to page 39, which includes the statutory authorities as well and government companies. Mr. Chairman, I guess the reasons for the delay are I guess manifold. One is oftentimes the reports, the annual reports, have to be approved by the relevant boards. If it's a statutory authority, it has to go to caucus. It has to go to cabinet, and then it gets sent to the Parliament for tabling. And obviously, depending on the timing of the meetings of Parliament, it might reach the Parliament at a time when the Parliament's not meeting, and therefore it doesn't get tabled. I know the Auditor General has some views too as to whether we should change that or not in terms of the standing orders and so forth, and I think those views are valid. So those are some of the reasons, Mr. Chairman, that I would know of. The time it takes to prepare the annual report, the approval process by boards, by caucus, by cabinet, and the actual submission of the reports here at a time when the Parliament may not be in session. We do continue, Mr. Chairman, we do continue to press this from the Minister of Finance. So the Accountant General, for example, reminded me, in emails that we sent out in February to chief officers, reminding them that based on the Auditor General's report, that at the 30th of November 2021, there were 4 to 5 annual reports that were not tabled in Parliament. We sent the email out imploring that whatever annual reports are available, they be sent. The responses, a few of the responses coming back have been that they didn't quite agree that their annual reports were outstanding. So we got into a situation where, there was reliance on how timely the Parliament's website was updated, if that was the reference document. We've moved away from that now in the sense that the audit office's composition of Appendix A is more along the lines now of order papers, whether the item is stated on order paper. As early as recent as this week, Mr. Chairman, myself and the acting deputy governor, we wrote out to chief officers as well, imploring the tabling of annual reports, and actually sent Appendix A to them to show the relevant outstanding annual reports. A lot of the responses coming back, Mr. Chairman, is that the relevant agency are aiming for the presentation of their annual reports in the December meeting of Parliament coming up now. A few of them actually said that, and I have this available in hard copy, a revision and update to the Appendix A to record the recent responses. Some of them, a few of them have actually said, well, we've tabled our report, our annual report, on the 7th of October, whereas the Auditor General's report that we are dealing with now is dated the 6th, so 1 day apart. So a few of them, which the committee will see, say that their reports have actually been tabled on the 7th of October, and quite a lot more say that they're aiming to have their reports presented in the upcoming meeting of Parliament in December. But having said all that, I still must say fairly that there are probably more blank spots than they are tabling dates that I see before me. We continue to try, sir, to get it, the annual reports tabled in Parliament, because we do understand the importance of it. Even at the EPS level, sir, the Auditor General's report obviously makes it clear in Appendix A that the entire public sector annual reports for earlier years still have not been tabled, and we certainly intend to do that in the December meeting of Parliament.
Thank you, FS. Just one last question here on this, on the reports. What challenges, if any, arise from the tabling of annual reports if they're not tabled in a timely way? What challenges do you all have as a result of them not being tabled?
Yeah. Thank you, Mr. Chairman. Mr. Chairman, the one challenge would be certainly that there would be non-compliance with our Act. Our Act says that the Public Management and Finance Act says that the annual reports should be tabled 5 months after the end of the financial year. So typically by the 31st of May. So there's the challenge would be non-compliance. The other challenge would be for the members of Parliament and the public would have the same concern in the sense that they're not well aware of what a particular ministry, portfolio, or office has been doing. Its activities, how it has used public funds, how it has performed in relation to what it set out to do in budget documents. That would be, a challenge if it's not presented timely. If it's presented 2 years after the date, then the information loses its usefulness. Those are the clear challenges that result from that, and the parliamentarians and the public, lose confidence in the process, that they become aware and become knowledgeable of how their funds have been spent, what ministries and portfolios are achieving for the use of those funds. Mr. Chairman, the Public Management and Finance Act specifies, not in any great level of specifics, but it's sufficient to allow the application of good sense, good judgment, to result in annual reports that are useful to the public. So it actually says in the Public Management and Finance Act that the annual report is to contain not just financial statements, but it is to contain an explanation as to how well actual performance compares with what was budgeted, and to give explanation for variances. So, and that's probably as detailed as it gets, but that allows quite a degree of flexibility in what the annual reports cover. So those, Mr. Chairman, are the challenges that arise from annual reports not being presented on time, non-compliance with the Act, parliamentarians and the public not knowing what ministries, portfolios, offices are doing, how public funds are spent, and how they're performing.
Okay, we need to move on now to the next area of questioning. That's speaking now and examining the status of the EPS audits. That line of questioning is going to be led by Mr. Dwayne Seymour. Mr. Seymour.
Thank you, Mr. Chair. And good morning to you all. The report itself, Mr. Chair, and through you, highlights that the entire public sector accounts have received adverse or unfavorable audit opinions because of various issues for at least the past 3 years. It is time for the government to focus on improving the quality of entire public sector consolidated accounts to move on from an adverse audit opinion. The Auditor General recommended that the Ministry of Finance and Economic Development should develop and implement an action plan to improve the quality of the entire public sector's consolidated financial statements. The action plan should set out a roadmap for moving to a qualified audit opinion in the first instance and an unqualified audit opinion in the longer term. The ministry had previously agreed with this recommendation and committed to having a plan in place by the end of June 2022. The Office of the Auditor General has informed us that the ministry shared the plan and roadmap with them in October 2022. We are also aware that one of the reasons for the adverse opinions relates to the non-disclosure of the $2.3 billion liability for the post-retirement medical liability. The disclosure of such a liability is a requirement of accounting standards, which you all know too well. Without making such a disclosure, the entire public sector accounts will not achieve a clean audit opinion. Can you say whether the plan addresses all the qualification points raised by the Auditor General?
Thank you, Mr. Chairman. Mr. Chairman, I'm going to address at least one aspect of what the Honourable Member just asked, and then I'm going to ask the Accountant General to speak to the plan as a whole. The Honourable Member just mention, one very, very important aspect that led to the adverse opinion, that is the non-recognition of the healthcare, not only the healthcare liability, which he correctly stated to be in the region of $2.3 billion, but there's also the cost of recognition to go along with that as well. And the magnitude of the cost recognition is anywhere between 100 million and 200 million annually. And on the liability side, the 2.3 billion that the honorable member just mentioned, that is sufficient enough to eliminate the government's net assets, which are currently at about 2.1 billion. So if you put that squarely on the face of the balance sheet, Mr. Chairman, a liability of 2.3 billion will remove assets, net assets of 2.1, and you're into negative territory. So that's the concept, the context of what we're talking about, the magnitude of what we're talking about. The positive news, Mr. Chairman, that I would give to the committee is that just this morning I had a verbal discussion with the Minister for Finance about this particular area, because it is significant. And he said that he would be willing to look at it, to look at the recognition of the liability and to look at the recognition of the cost that would result from fully complying with the international IPSAS, the International Public Sector Accounting Standards requirements in this area. So he said he was willing to do so. He wants to have a discussion with the actuaries as to what the magnitude would be in the future, because Mr. Chairman, as an accountant, you would know that in addition to the normal cost of recognizing this, which could be in a region of, like I said, anywhere between 100 and 200 million, and this is additional costs over and above what you do day to day. There's also the swings that will result from changing actuarial assumptions and changing demographic assumptions, and there are that magnitude is so great that it's possible that in 1 year you could have a cost, and in the next year essentially you could have a credit, and so the accounting for it is perhaps not easily straightforward. And we were having a discussion about the normal cost of recognizing these obligations. We could bring that onto the statement of financial performance, and then the significant swings that result from changing assumptions and so forth, that could be accounted for through like the equity section. And so that, because if the government's operations are not changing fundamentally from 1 year to the next, you don't want a situation. It would be kind of ludicrous to have a situation in which the cost associated with it is 1 year it's a cost and the next year it's a credit, and essentially becomes income. When I say credit, becomes income. So that would be not a good situation where the operations of the government is not changing. Mr. Chairman, I would just close on this particular topic by saying that for the public's benefit, what we're saying in terms of the recognition is that each year that a civil servant continues on as a civil servant, that year of service is essentially accruing a future benefit that he or she will have post-retirement. So in 2022, I am pursuing a year's activity with the government, but that year is going to benefit me post-retirement or any other civil servant. And we should be recognizing in 2022 the fact that that year is going to benefit me in the future. We're not doing that right now. We're not recognizing that future benefit now. What we're recognizing now is the premiums. The premiums that the government pay to Cineco to cover my coverage today. So that is what we're talking about, the additional cost. So it's not just the cost of Cineco premiums that the government pays for civil servants, but we need to, in addition to that, we need to recognize that future rights or benefits are accruing in 22, and we need to recognize that. And that is a significant figure that could easily cause the government to go from a surplus position into almost guaranteed deficit position in the future. And so that's why Mr. Chairman, that's why there has been some reluctance in past years to undertake this fully, because your net assets are going to go probably to negative, and your surpluses could easily become deficits. So that is what I wanted to sort of explain to the public, and I'll ask the Accountant General then if he could address the other aspects of the Auditor General's report that led to the adverse opinion and the plan to address those.
Mr. Chairman, through you, just to clarify, the action plan we committed to June 30th, 2022, and we finalized that plan on June 29th, 2022. During this follow-up audit, the Audit Office did not request a copy of that plan or ask if we had completed it, and so we didn't provide it to them until we saw the report came out, which we weren't aware of, and came out and said that we hadn't developed the plan, which was incorrect, obviously. So that is the time that the Honourable Member mentioned that we submitted the plan to Audit Office. It's not because we didn't have a plan, it's just that the Audit Office had not requested a copy of it from us. And so we provided it to them in September. Additionally, the action plan, to the member's question, the action plan does address all of the qualifying points that would lead us, that have us currently in an adverse opinion. A number of these will take time to come into effect. One of the major changes that we're working on is the framework for budgeting and reporting, and that's in regards to merging the executive and entity orgs. This has been an audit point from, not an audit point, but coming out of a recommendation in 2013 that we would merge executive and entity orgs. And we've looked at a few approaches to doing that. However, we're now in the process of redoing our budgeting and reporting frameworks. And so we've decided that we'll include that into it rather than making random changes throughout the Public Management Finance Act. We'll include this change as part of the change to our framework. And so then we'd see some significant changes at that time. I'd like to remind the committee that the entire public sector accounts, so we simply compile the accounts for the entire government. So it's not that we have control over things such as revenue, for example. Revenue completeness is a prevailing issue that we have. Every CFOs in every ministry are responsible for collecting revenue and ensuring its completeness. We in the Ministry of Finance, we only consolidate that information into a set of entire public sector accounts. And so we're being held responsible for something that a CFO has the authority to make changes over. And so when we merge the executive and entity orgs, we'll see the audits being conducted then at the executive level, which means CFOs will then have the motivation then to ensure their executive accounts are in order, because currently they're only producing clean accounts on their entity level accounts. So things like revenue completeness for coercive revenue is going untouched by CFOs at this stage. So that's a major contributor. And just to touch on that a little further, the Ministry of Finance went as far as to get a framework developed for improving revenue completeness back in 2019. and we roll that out to CFOs to try to assist with the process of getting them to improve their revenue completeness. So that's one example of the matters that we have. However, we have an entire audit corrective, EPS financial audit corrective action plan, and we're happy to share that with the committee for your review. If you have any specific questions, we're happy to answer those as well. Thank you.
Mr. Chair, I want to thank the FS and the Accountant General for those responses. Although, Mr. Chair, I don't want the public to go away with it in mind that we don't take our agreements or recommendations from the Attorney General's office seriously, and what I'm trying to say, Mr. Chair, as kind as I can, is that if a recommendation was said to have been committed by or have in place by June 2022, we would have thought that the person who you agreed the recommendation with, you would have supplied a copy to them as quickly as possible to have them tick that off of their list of things that they were expecting from that ministry or department. But to move on, Mr. Chair, are there any plans for achieving an unqualified or audit opinion for the entire public sector? And I note the concerns of the financial secretary, and also any plans to the disclosure of post-retirement medical liability in the financial statements. Thank you.
Mr. Chairman, through you, the corrective action plan provides that plan of achieving a qualified and then hopefully an unqualified once we're able to get everything on board. As you mentioned, the prevailing issue, the biggest issue we have is the post-retirement healthcare benefit. The liability is massive, and without including that, I would see it being difficult for us to receive anything other than an adverse opinion because it's so pervasive. It's a massive liability as well as a massive expense. So it impacts our surpluses, it impacts our net worth, and it's just a massive liability for us that we're not recognizing. So without that, I'd see us having a challenging time getting anything other than an adverse opinion. However, obviously, I'm not saying that we're not working on everything else to ensure that we have everything in place to achieve a qualified and eventually an unqualified opinion. That's why we developed the plan, to ensure that we are able to achieve that in upcoming years.
Mr. Chair, I just want to thank the Financial Secretary and Chief Officer and also Accountant General for their responses. I know the task is hard at hand. We have to do the best we can.
Thank you very much, sir. We're on to the final segment now, which concerns departmental transfers because of the government reorganization from 2021. For that, I'm going to turn to Ms. Conley, who will lead that line of questioning.
Thank you, Mr. Chairman. Through you to the Financial Secretary. Following the general elections in 2021, government reorganized and established new ministries on the 1st of July 2021. This meant that some previous ministries were discontinued, some departments were merged into new ministries, and some completely new ministries were created. The reorganization process meant that department budgets, assets, and liabilities had to be transferred from existing ministries to form new ministries. This is a significant task. However, some ministries did not complete the transfer of assets, liabilities, and budgets on time, and the process was not carried out efficiently. We understand that the Minister of Finance issued post-election procedures to guide this process, but did not drive the process to ensure all transfers were completed before year end. So I know that you all did provide the post-election procedures. My question is, did the ministries not follow your guidance? And also, what was your role in driving and supporting this process?
Mr. Chairman, through you, this comes back to the issue with the Ministry of Finance not having any direct performance management authority over CFOs, and it's something that we're trying to address so that we can actually take a stronger leadership role. At this time, our only recourse is through the Deputy Governor going to Chief Officers and then that passing on then to CFOs. At this time, we don't have any say in the performance management of CFOs, and without that, our hands are a bit tied in order to get them to actually perform in regards to what we require of them. It's something that we're working on to ensure that we have a say in the performance management. We gave them the instructions, we followed up with them, we didn't get timely responses from them. However, in all fairness to CFOs, they had a lot on their plate with the reshuffle. There was a number of personnel changes and everything else, so it's a lot of things going on in 2021, so I don't want to make it sound like, oh, the CFOs just aren't delivering, because there was a lot going on during that time. I think it would be very beneficial for the Finance Secretary to be the group CFO, in that all CFOs report into him. I see a massive amount of benefit in that he could actually provide some serious performance management of the CFO group. But there was a number of challenges going on in 2021 with the reshuffle, and there were creation of new ministries and everything. We provided guidance. Perhaps we could have done some more hand-holding. We tried to help as much as possible. But with the real key before we can see some real change would be changing the performance management structure so that the Financial Secretary has the authority over the Chief Financial Officers. That's going to be the real key to leadership being able to be taken on by the Ministry of Finance. And it's something that we're working on. Thank you.
So, Chair.
Mr. Seymour?
Very interesting response from Accountant General, and kind of agreeing with him, actually, and I'm surprised that this hadn't been taken care of. A long time ago, we could see what would happen if the person didn't have the teeth in the structure to be able to have direct say in this, and the group of CFOs throughout the whole. I suggest that right away that we need to find some policy to remedy this situation. Thank you.
Thank you, sir. Any other questions with regard to the witnesses? Okay, that being said, Financial Secretary, we're at the end of questioning for you and Mr. Tibbetts, the Accountant General. So I want to thank you for your time and for the forthrightness with which you've answered questions today. And, this will conclude now this segment of the hearing this morning. I'm going to give us all a 5-minute break. We give you a chance to get back into your regular spaces as well. And then we also have our next witness, who is the Acting Deputy Governor, Ms. Gloria McField-Nixon, who will be joining us, and we hope that we'll be able to get through, this next segment and final segment of the hearing today reasonably quickly, given the comprehensive answers we've received thus far. So, members of the committee, let's all take a 5-minute break and be back here. Thank you. Thank you all for being prompt. The proceedings are now resumed within this meeting of the Public Accounts Committee. And we turn our attention now to the final witness of this hearing, Mrs. Gloria McField-Nixon, who is Chief Officer of the Portfolio of the Civil Service, and also she's here in a dual capacity, I should say, as well as in addition to being Chief Officer, she's here also as Acting Deputy Governor, and will be answering questions in both capacities. So, Ms. McField-Nixon, I thank you very much for being here this afternoon. I do have one request before we actually get into my preamble and turn things over to questioning over to my members, but just ask for you to please convey our best wishes to the Deputy Governor. I know he's had a difficult time with his illness, and I understand that he's doing well and recovering, but please give him our best wishes. Let him know that we send our best wishes to him from the committee.
Thank you, Mr. Chairman. That is very kind, and I will be very sure to pass on the committee's best wishes, which I know will be very warmly received. Yeah. Thank you, sir.
Thank you, too. So, Ms. McField-Nixon, welcome again to the committee. We're speaking about the Auditor General's report on the financial reporting for 2021. And that report summarizes the financial results and audit opinions given to public bodies for 2021 financial year, and also provides a host of information about the financial health of public entities. The report draws attention to several key audit matters, and the report makes 7 formal recommendations to bring about improvement. While many are new, some are repeat recommendations made in other reports issued by the Auditor General in the past. We have already heard this morning from the Financial Secretary and the Accountant General about the role of the Ministry of Finance in this whole process. We thank you for attending today, both in your own capacity as Chief Officer for the Portfolio of the Civil Service and now as Acting Deputy Governor as well. We appreciate you being here today and knowing how busy that you must be. We will endeavor to keep our questions limited to those we feel are most important. And similarly, we would also be grateful if you could keep your responses brief so that we can cover the range of areas we have in the time that we do have available, because I know your time is constrained. So with that preamble, I will now pass over to Ms. Catherine Wilkes, who will begin the line of questioning with regard to the Public Authorities Act, Section 47. Ms. Wilkes.
Thank you, Mr. Chair, and good afternoon to Mrs. Nixon, McField-Nixon, sorry. My first question will be in relation to acts and regulations, Public Authorities Act, Section 47. And the Auditor General had made 2 recommendations in the 2021 General Report relating to Section 47 of the Public Authorities Act. Firstly, that the Cayman Islands Monetary Authority, the Health Services Authority, the National Roads Authority, and the Water Authority of the Cayman Islands should urgently complete the implementation of the Public Authorities Act to ensure that they are fully compliant with the Act. And secondly, that the government needs to consider the financial implications before further implementation of the Public Authorities Act, particularly Section 47. This recommendation is similar to a recommendation in the Performance Audit Report, Improving Financial Accountability and Transparency in May 2021. In its management response, the government agreed and accepted that recommendation. However, it appears that the government response may only be in relation to Section 47, subsection 1 of the Public Authorities Act on salary scales, and not in relation to the benefits of pensions and health care. So I was just wondering if you are able to speak to the role of the portfolio of civil service in providing guidance and ongoing support to public bodies with regards to the implementation of Section 47 of the Public Authorities Act. Long question, sorry.
Through you, Mr. Chair, I'd thank the honorable member for her question. As she has outlined, the portfolio of the civil service had been charged by Cabinet to assist with the implementation of the Public Authorities Act, specifically as it related to ensuring that there was a common methodology for the way that jobs were evaluated and remuneration assigned to positions across the wider public sector. With that underway, honorable member, we would have conducted a review of all of the roles within some 23 statutory authorities, either doing those ourselves or outsourcing it in the case of large SAGCs who employed 100 or more staff. The largest of those obviously being the HSA, which is in the proximity of about 1,000 employees, so quite a significant undertaking. But for the vast majority of the SAGCs, they are smaller entities, and POCS conducted those ourselves, and those were done between April 2019 and through the end of through the end of 2019. So between April and November 2019, the small SAGCs were completed through POCS. We also, using an independent contractor, supported the large SAGCs, several of which are named in this recurring recommendation from the audit office. And there was one SAGC that did not come in within the main project due to timeliness. That's the NRA, and I can say that they have also now completed their job evaluation. So we have seen the consistent application of a job evaluation methodology across the entire public sector has now been completed. In terms of POCS's role, not only did we either directly assess all of those roles in the vicinity of 1,000 unique jobs that were evaluated during that process, either ourselves or through an independent contractor, but we continue to receive job evaluation results as new roles are created within our SAGCs or as these roles are amended within the SAGCs. So the POCS has a continuing responsibility. We've also provided support to the SAGCs in understanding the methodology so that they could be proper advocates and in being able to explain the jobs within their SAGCs to get a consistent outcome, but also, most importantly, being able to explain the process as their internal HR needed to make sure that employees understood what was happening with the way that their jobs had been evaluated. We continue to work with the SAGCs so that they are able to access training so that capacity can be taken increasingly on board within their own SAGCs on a sustainability basis. And we have ensured value for money by contracting in such a way as that all of the SAGCs are able to tap into that for benefit. So those are some of the ways that we have sought to achieve the fulfillment of the Section 47 of the Public Authorities Act as we were charged by the Cabinet. Now, there's an interesting point regarding the implementation of the findings of the evaluation results. One tool that we provided was a conversion calculator, and it was intended to ensure that once the results were received, when the SAGCs were calculating the cost of implementing those findings, that there was going to be a common methodology that would allow the ministries receiving that information to be able to make an objective assessment that the costs were an accurate reflection of the strictly required impact of implementing Section 47, and we're not being influenced by other personnel decisions that may have been being, taking place simultaneously within the SAGCs. So we did try to provide a tool that would allow ministries to assess the validity of the costing that was taking place regarding the implementation of the Public Authorities Act, specifically Section 47. We have had discussions throughout this 2-year period with SAGCs from time to time on approaches that might be taken. And we have been very transparent both in the starting of the project and in our engagement with Cabinet that our role was certainly to provide that technical assistance and that we would continue to be a sounding board for HR bodies, but that the law really envisioned persons who had full sight of SAGC operations and were charged with the governance, i.e. The chief officer is responsible to be responsible for ensuring implementation occurred, and that and other tools we had at our disposal was our internal audit unit and ultimately the OAG, who is responsible for the complete audits that take place on an annual basis of the SAGCs. The vast majority of the SAGCs, by the outcome of this report, my takeaway is that the vast majority have implemented, including some large and complex organizations, if you think about the HSA and the roles that they would have. And that has been as a result of continued engagement with those SAGCs. So where they flag issues that have come up from the evaluation, we have taken that back, and largely those are around internal equity and the way that the entity operates in the reporting lines to try to resolve those conflicts. I am aware, in the case of at least one SAGC, where there is a concern that there are widespread positions that are subject to commercial factors. And so the position the SAGC has taken is that it would be difficult for it to apply the results in those roles because it could frustrate its ability to be able to backfill the positions or indeed to retain the staff who are under law protected in their earnings. Any existing employees can't receive less as a result, but where they felt that essentially red circling or ring fencing their future earnings might actually cause a deterrent for those staff remaining and create retention issues. For the majority of SAGCs, there are more limited conflicts where commercial interests are cited as a concern for the role, and the Public Authorities Act provides how SAGCs can still be compliant by essentially having an exemption applied to those roles. And there are different consultations that have to take place when that is being done for positions below the CEO or where it's being done in the recruitment of a CEO. But the law does envision how that can be done. So I think the vast majority of SAGCs have found a way to deal with the positions that are particularly sensitive to commercial pressures and still abide by the provisions of Section 47. But I will not, I do have some sensitivity where the commercial realities are widespread and and the job market right now is particularly competitive for positions that are critical to the SAGC fulfilling its mandate. I don't believe that is widespread in terms of the number of entities that would be impacted by that they will have individual positions that will be subject to it, but not as many as one SAGC that I'm aware of. Again, in the way that the law is designed, it provides for ways to deal with those conflicts, and we are still awaiting the deliberations of how, where it is widespread, if there is to be any differing approach that is recommended in terms of the way that the law would treat such an SAGC. But for the vast majority of the SAGCs, they've already found a way to implement within the current provisions and to use the exemptions for the limited positions. And I believe for some others, it may be merely a factor of time. For some of them, there are considerations regarding the affordability of the implementation where it will require additional support, and I believe they are taking a phased approach to doing so. So while I know that this is a concern, that this is a recurring issue, the numbers are reducing in terms of the SAGCs who are falling afoul of Section 47 each time we revisit this issue. And I believe for one SAGC, it has been suggested that there is a consideration about how we might resolve the issue because of how widespread the commercial pressures are on positions for the fulfillment of their mandate.
Thank you very much for that very comprehensive response. The only other question that I wanted to ask was in relation to, I don't think you said it, but if you did, forgive me, in relation to the full financial implications in relation to the pension and health benefits. If it is that they're adopted by all of the SAGCs, has the government considered those implications, the financial implications?
Thank you for that question, Honorable Member. What I would say is that the vast majority of SAGCs are members of the Public Service Pensions Plan, so there is already a high degree of harmonization of pension benefits among the SAGCs. This was the situation even prior to the establishment of the Public Authorities Act. There are a handful that are not members, and so their benefits would be different. As it relates to health care, that is not there's not as cohesive of a position in terms of the benefits, but it is not, it relates both to in their active employment, the mobile benefits that are provided through private sector organizations and companies in comparison to the provision of Cynico coverage that the public service would have. And as a result of that, there's also not as consistent an outcome of post-employment health care benefits, although we have seen, as reported in the financial accounts of these SAGCs, increasingly further harmonization of that benefit reflected in their liabilities and policies. So there's progress that's being made there. I believe that the cabinet was minded to start with the salaries and wages as the first stage of harmonization, recognizing that it was sort of the most objective benchmark to begin with, and then to look gradually at harmonizing other benefits. And the law does envision that SAGCs have the ability to look at the full mix of remuneration elements, so total remuneration that they bring to the table, even in terms of the hours that employees might work, in order to arrive at an harmonized position. I'm not aware of an existing policy thrust to fully align all of the health benefits or the pension benefits for the handful of SAGCs that are not a part of the public service pension program. I think that the emphasis right now continues to be on getting the foundation of the salaries right, which has been done for the majority of SAGCs, but we still, as you have identified, have a handful that we are working through. And I believe for at least 2 or 3 of those, it's just a matter of timing.
Thank you very much. I don't have any further questions.
Thank you, Ms. Wills. You can continue, though, with the next segment of our line of questioning, which is the non-compliance with Public Management Finance Act, Section 11 and Section 12.
Thank you, Mr. Chair. In relation to the non-compliance with the Public Management Finance Act, particularly Section 11 and Section 12, the Auditor General issued emphasis on matter paragraphs for 14 public bodies because of their non-compliance with Section 11 and 12 of the Public Management Finance Act. The government did not introduce a supplementary appropriation bill for 2021 in Parliament by the 31st of March as required by the Act. Just wondering if you're able to speak in your capacity as Acting Deputy Governor on whether, or I should say on why 14 public bodies did not have their supplementary appropriations approved in the time frame required by the Public Management and Finance Act. Was there a particular reason for the delay? Are you aware?
Thank you. Through you, Mr. Chairman, I thank the member for her question. So when we're looking at the formalities required under the Public Management and Finance law for financial changes that are taking place under Section 11 and Section 12, there are a number of steps that are envisioned. The honorable member has mentioned that the appropriation bill was not brought, but certainly the other elements that would allow for such appropriation changes to take place and that were within the direct control or greater influence of the civil service were certainly carried out. I think it's important for the public to also realize that these changes relate not just to increases, and in many cases they don't result in any increase to public expenditure. They are often reallocation of savings that have been realized in one area of government in order to fund activities in another. I know in the case of our own portfolio, we were able to successfully establish an emerging talent and development fund by two entities, ourselves, the portfolio of the civil service, and the then Ministry of Plahi, coming together in order to identify savings that would allow us to establish that fund to provide opportunities for returning graduates. So, you know, these things, the Section 11 and Section 12 are valid uses that are envisioned in the flexibility of the Public Management and Finance Act. But we do understand that with all of those internal measures having been taken and it being brought all the way to Cabinet, that the matter was not brought to this honorable Parliament to be approved. This was an election year, and so you would have had extraordinary activities that were taking place at this time. I understand that the bills were prepared, but they were not, there did not appear to be opportunity in that fiscal period for the matter to have been brought to Parliament, given all that was taking place in Parliament at that time, the elections that were being facilitated and rightly prioritized, and it is my understanding that the Ministry of Finance does still intend to bring that appropriation.
Thank you. I don't have any further questions.
We then now turn to the next line of questionings concerning the topic, the Standards in Public Life Act. Ms. Barbara Conley.
Thank you, Mr. Chairman. Through you to our witness regarding the Standards in Public Life Act. The Auditor General recommended that the government amend the Standards in Public Life Act to require notice of interest forms to cover the entire financial year and should ensure that relevant information from these can be retained and used by public bodies to manage any potential conflicts of interest. The Auditor General previously made this recommendation in her report, Improving Financial Accountability and Transparency, in May 2021. We understand that the Commission for Standards in Public Life discussed this matter in January 2022 and agreed in principle to a proposed revision to the Act. This was to be communicated to the Attorney General's chambers for their final agreement of legislative changes. Can the witness give an update on the proposed changes to the Standards in Public Life Act?
Thank you. Through you, Mr. Chairman, I thank the honorable member for her question. I am advised that the Commission for the Standards in Public Life has reviewed this matter again more recently in terms of the looking to align the reporting periods and to utilize such information, allowing it to be held by organizations for being able to rely on it for their internal purposes. The Commission and commissions will, as you're very much aware, will change from time to time, and so this issue had very much been brought back for consideration by the Commission, and the Commission was of the view that the declaration of interest, which is required under the Standards in Public Life Act, and the notice of interest, which is provided to the Office of the Auditor General, aligned to the calendar year, that those were driven by differing legal obligations. And so to have the disclosure, to have it utilized in the way that the audit office is suggesting, and this is my review in comparing the content of what I am required to disclose under the Standards in Public Life and the notice of interest disclosure that is required under the audit office, is that there are differing disclosure obligations as well as different privacy safeguards that are applied to the two. So where I can see the attraction in thinking about what the Commission may have given contemplation to, the expediency of having them aligned would certainly, on the surface of it, make total sense when you realize that under the Standards in Public Life filings, there is a more onerous obligation for disclosures by public servants, quite rightly, and but the requirements for under the notice of interest, which are given into administrative bodies and do not have the same security of the way that that information is handled, for some of the questioning is only limited to disclosure where there is a question of a conflict of interest. And that is a sort of lesser disclosure standard that's more aligned to the disclosure required of members of boards, governing bodies under the Standards in Public Life Act. So if we were to treat them as one and the same, you might actually have on some points less information, or on other points more information but being submitted to administrative bodies where you would not have the same confidentiality ensured as is provided for under the disclosure to the Standards in Public Life Commission, which has does this through a secure portal and safeguards the information with very limited circulation and certainly monitored circulation or access of viewing. The Standards in Public Life Act also has disclosure for other reasons. It requires that disclosure where persons are going to stand for office, and they are obliged under that law to make disclosures for those purposes as well. So the remit and the requirements under the Standards in Public Life Act are broader than would occur for the filings for our year-end reports and annual reports as required by the Office of the Auditor General in order to comply with auditing standards. So I don't know, I certainly wasn't in the room, but in deliberating on it, the Standards in Public Life Commission has indicated that they believe that the legal bases for the two filings are separate and distinct, and that they are not inclined to align them for those reasons. And in looking at the notices for public servants under the two, I do realize that there is a differing disclosure requirement, and there's certainly different treatment of the material, which could give rise to privacy if the higher standard were applied to the disclosure for the notice of interest, or could actually water down the disclosure if the conflict of interest test were to be applied across the board to even what the Standard in Public Life Commission itself had access to.
Auditor General, I believe you had a question.
Just a comment, just wondering if the Commission and the witness understood the recommendation. We weren't recommending that everything was shared, but relevant information. And also that the time aligned. And again, it's more to avoid duplication. We understand the sensitivity and the commercial, the personal information, but the recommendation was not that they be shared, that relevant information be shared.
So I thank the Auditor General for her question, and I may have brought examples of the information when we're talking about relevant information. One of the questions that I recall, for example, relate to the holding of property, something that both bodies deems to be relevant. The question is posed under the notice of interest form as where the holding of that property might be a conflict to your responsibilities in carrying out of the duties within the entity that you're charged with being a member of. The very same question for a public servant under the Standards in Public Life Act doesn't ask for a conflict of interest, to the best of my recollection. I provide my block and parcel number for myself and the closed interest. So, land that my husband might have access to as part of any sort of family holdings. It's a short filing for me either way, so I realize that it's not the same level of burden on me that it might be for some persons. But in looking at the whole issue of the relevance and understanding the question, I think it's also important to understand the disclosure obligations and the tests that they are subject to, so we don't gain with expediency certain gains and lose far more in terms of the various bodies being able to fulfill their mandate and the issues that arise there. And we're all now having to contend with the obligations that have come about as a result of data protection. And so those considerations also have to be applied to any commitments which may have been made.
You can continue with the next segment, which will be the departmental transfers because of government's reorganization last year. That'll be the next section.
Thank you, Mr. Chairman. Through you to the witness. Following the general elections in 2021, government reorganized and established new ministries on the 1st of July 2021. This meant that some previous ministries were discontinued, some departments were merged into new ministries, and some completely new ministries were created. This was a significant task to undertake and required sufficient staff with the right skills to fill senior posts in new ministries. The reorganization process also meant that departmental budgets, assets, and liabilities had to be transferred from existing ministries to form new ministries. Ministries did not complete the transfer of assets, liabilities, and budgets on time, and the process was not carried out efficiently. Can the witness say what guidance, advice, and support was given to the incoming administration by the Deputy Governor and you as Chief Officer of the portfolio of the Civil Service?
Through you, Mr. Chairman, and in response to the honorable member's question, and I'm going from recollection here, so please bear with me. Whenever there is a election period, there will be advice that is gathered with the input of various senior leaders within the civil service based on portfolio responsibilities to suggest or recommend an organizational structure that would seem to encourage synergy and which would also account for the number of ministerial positions which might be arising. These will increase from time to time. That was certainly the case with the last at least two election periods. It is always the privilege and authority of a government to accept in part, whole, or not at all those recommendations, and to form the organizational structure that they feel is best aligned to delivering their policy priorities. Where those two organizational structures differ significantly, and indeed where they differ significantly from the organizational structure which is already in place, further advice comes in the form of what are the implications of such a move and what is the recommendation in terms of timing. Every administration will come in with a certain amount of existing appropriations which apply, and so you have to be able to bring balances to a whole and to deal with how you're going to allocate your assets, liabilities, and to move personnel. And as strenuous as the reallocation of assets and liabilities are for our financial colleagues, you know, the reassignment, the moving of personnel requires that we also take the time to take people through that change management process. And so there were a lot of moving parts that followed the creation of new ministries during that time. We were mindful of the impact on the public purse, and so we had repeated attempts to resource the structure in a way that would have the least additional resourcing requirements result from that. Also, and the public will be aware that when we're going through these reorganizations, they may themselves be fluid. So you may have, for a period of time before a final structure settles, continued changes to the organizational structure which impact the work that had been done previously, both on the finance side and in terms of personnel contemplations. Now, there's sort of two tests, maybe three tests to how successfully this has been done. First and foremost, are we able to continue to deliver the services that the public require and that the cabinet require, and the work of the civil service continued seamlessly during that time. The second is, did we do it to such a standard that it could be successfully audited and that the appropriateness of the treatment withstands that type of independent review, and I believe that the audit opinions which have come out, certainly thus far, all of which have been clean, have demonstrated the diligence that has been given to that process. But the third, obviously, has to be the efficiency and pace with which we're able to achieve those things. We did acknowledgedly have some issues regarding pace. I would say, in fairness to everyone involved, that the changes which took place were larger than we had anticipated based on recent experience. We always have some changes to the organizational structure, but we did have significant changes there, which have resulted in other gains once they were facilitated. But you had CFOs, chief officers, other policy leads. They were all in the process of moving, and that does take time. We currently have it settled, and we have numerous CFOs that have inherited dual reporting lines during this process. This Honorable Parliament shares a CFO with my own portfolio, and that is true for a number of ministries and independent offices. We were able to do that and save the public purse, but you have time, you have quality, or you have cost, and I believe that we were able to save on costs with the approach that was taken. We've been able to preserve the quality of the work that's coming out, but I do appreciate that that timeliness of the restructuring was a factor. There are limitations in terms of our targets when we move. We have to do this with clean breaks in the financial reporting cycles, so they have to coincide with month ends. So whenever we miss a target, there is limited windows for when you can set the next one. And so certainly there's been lessons learned. Those lessons have been documented into further guidance that's come out from the Office of the Deputy Governor in terms of mergers and other restructuring advice, as well as advice that has been offered from the Ministry of Finance itself. And I would also like to say that part of this will also improve as the process for doing this becomes less onerous due to the constraints that we have in the technology that supports our accounting systems. So, and I know that is a matter that is also under review right now by the Ministry of Finance and is being progressed proactively. So I understand that the observation from the Office of the Auditor General about the pace with which it was done, but we got our submissions in largely on time. We've had record number of the audit opinions coming out, and I can say for all of the bodies charged with complying with the Public Management and Finance Act, we are all demonstrating progress. This report bears that out, and even in turning around a record number of audits to the deadline specified under law. While they were not all completed within that time, a record number has also been delivered as a result of the changes that came about from the restructuring. So it was a significant amount of restructuring that impacted the work that we had within the existing limited resources, but it was delivered to a high standard, and I believe that the next time we are confronted with this magnitude of change, we will have made a number of improvements that will allow us to do that with greater pace.
Thank you, Ms. Nixon, for that comprehensive answer. I have one more question regarding the government reorganization. It's been 12 months since the reorganization and the new ministries were created. However, we note that a number of senior staff are still in acting positions or shared across ministries. What are your plans to fill senior posts on a permanent basis, given the number of people in acting positions such as acting chief officer, acting deputy chief officer, and other senior roles?
Thank you, Honorable Member, for that question. This one is a difficult one for me to answer as the acting deputy governor. I'm speaking about the permanent appointments to individuals who would be my peers in my substantive position as chief officer. Where the structures are mature and we've had personnel moving from, what we like to, I sort of refer to as the tenant, the tenant entity in a ministry, the one that really defines that ministry. We do have a number of acting appointments there, and I understand from communication I've recently received from the Deputy Governor that it is his intention to progress the recruitment process to resolve those temporary appointments. We continue to have ministries that are of differing size and areas of responsibility. And I know that the Deputy Governor is keen to ensure that we sufficiently test the whether this will be a continued approach to the assignment of work. Once appointments are made, they are often on open-ended terms, and the Deputy Governor is closely assessing the implication that this has for the structure of our senior leadership team and and how well this continues to meet and deliver against the government's priorities. He is regularly in contemplation of this and periodically discusses the same with the Honorable Premier to see how well we are delivering with our current structures, to see if this will endure as the approach that we take to delivering against the priorities. So I know that he has been very mindful to be deliberate and to take the time that is necessary before locking in a permanent senior leadership structure. In the meantime, we continue to have and build incredible leaders across the civil service that facilitate our succession for the positions that are permanently posted, and the fact that the civil service, the talent across the civil service was able to step up, and we had a significant increase in the number of entities that were there and that needed leadership, I think bode well for the civil service, and it certainly, there certainly would be no hesitation from the quality of persons that have stepped up to proceed with a process of confirming leaders. But the Deputy Governor wants to make sure that the structure is indeed going to be one that will be lasting before we make permanent appointments that would be on open-ended terms.
Thank you, Ms. Nixon. And I have no further questions.
Thank you, Mr. Chair. I just wanted to ask a question. I don't know if it was covered earlier, but when we do have these new governments coming in election year, what's the advice on first instance that, and I know some mergers and reorgs are more difficult than some in different ministries. Are there any advice given to the new premiers or after elections or ministers?
And and I thank the honorable member for his question. There is advice. I referred to proposals of ways that the structure might be further streamlined or changes made in the grouping of subjects, sometimes so that it emphasizes synergy. And this is based upon the work plans that are ongoing, the priority projects that have been alluded to in a government's manifestos, which are things that we closely monitor during the election cycle to anticipate as best we can things that may take up the policy agenda as major commitments. And we put forward an organizational structure as best we can anticipate that may, in our estimation, meet that call. Sometimes we get that, our advice is aligned and we've assessed that situation correctly. But where it is not, then we have discussions about how then do we go about fulfilling this structure so that we can deliver the mandate, the time implications that are going to be involved in that, and rough ideas about what are the implications of those changes. We've talked about the significant movement of staff, particularly at the ministry level that's involved. There's significant movement of entities. This makes, it makes long-term comparisons difficult the more that an organization changes, because the composite parts of the organization that would make financial comparisons even relevant. Depending upon the extent of change, it becomes harder to make those straight line comparisons from one fiscal period to the next. So we will talk about that in broad terms, but we understand, Honorable Member, that at the end of the day, the civil service serves the government and not the other way around. We understand that every government lives with a very finite period in which it has to deliver the people's priorities, and that things which look particularly efficient on paper may not actually meet with the depth of the vision and the change, the thrust of change that the government really wants to have impacted. I know that in the Cayman Islands continues to see significant changes in its population, significant changes in the way that government interventions are required, and by being able to structure ourselves differently, we are ensuring that there is bespoke focus being given, even at the policy level, to having those broader areas of priority receiving equal attention on the policy agenda. So by increasing our leadership focus, we're able to meet the government's expectations in that way. There are pros and cons to differing approaches, and while one may have been envisioned by us with an emphasis on the synergies that we foresaw, we do understand that the government in coming to the table is not just going to be hearing from us, but will expect to have been heard by us. And so we have to make sure that we can demonstrate our ability to deliver against that as well. And we're working on the agility and pace in which we do that.
Mr. Chair, I want to thank the acting deputy governor and chief officer very much for that response. In my mind, I'm thinking that there should be some way, at least a guideline document or handbook or something that could be handed as a guideline as to the woes that could happen if certain reorgs happen. At least persons would know the difficulties, new members coming in, new premiers new leaders, etc. And this affects a lot in terms of the reorgs, in terms of TPs and otherwise. I've felt the blow of that myself, and these reorgs happening and not being given enough information as to the actual split itself and what was left with one minister and what was transferred to the next. So definitely this is a very serious conversation that has to be had. Obviously, the civil servants can't dictate who's going to be elected or who's going to be re-elected or what composition's going to come in, whether it's a party or whether it's an independent independence. So definitely something that we need to develop something that as a guideline, and I take the acting deputy governor's point as everyone wants to be heard.
Thank you, Mr. Seymour. Next, we're going to turn to the next segment, which is backlogged audits. At the end of September, the Auditor General's report says that there were about 16 audits that were backlogged, and a couple of them have been backlogged for a number of years. But we also learned as well that a couple had been signed off. So the numbers over the years, I think, are getting smaller. But nevertheless, it's been an issue now for several years, let's say many years, in getting these backlogs cleared. Are you able to say what does a deputy governor do to hold chief officers to account with regard to the backlog of audits and clearing them on a timely basis?
Mr. Speaker, and this is one where I will certainly invite the audit office to also comment, because it is, what I will say is that the vast majority of our audits are able to be delivered within the statutory time frame. And I think that has been true, not only because of the professionalism of all involved in doing so, but because of an emphasis approach on focusing on staying current with those that are able to, where you're looking at a particular time frame. So for those that are current, you are looking at their set of books for that current year, and you're able to ensure that the deadlines can be met around the table. Where there's a backlog, it's not from a lack of the same sort of filing taking place within deadline by all of the entities. But once you get into a backlog situation, it becomes that much harder because the longer that it takes to resolve whatever year is still pending, the more adjustments that could potentially be impacting all of the years to follow. I have received reports coming into this hearing from certainly at the ministry level, the ones that have been impacted, and they will say that that this is really about resourcing priorities, that they are engaged in the process of getting their audits brought current, but are subject to resourcing challenges that would allow them, once they've fallen into an arrear situation, to be processed within the same time frame as those who are current. So what the deputy governor has been doing is continuing to engage with the chief officers to ensure that the provisions and the deadlines that are applicable to them for their filings are being met, to continue to work in partnership with the Ministry of Finance and the Audit Office on the joint assessment of the quality of the work that's being done within the ministries, led by each chief officer, to ensure that those are meeting expectations, and where they are not, and that hasn't been indicated as being a driving force right now for the ones that are outstanding, but on occasions where they're not, to deal with that, and to certainly continue to closely monitor the situation until it's resolved. But where our particular ministries find themselves awaiting their cue, it is difficult really to, we're all working to confine resources. We've all been faced with a larger number of entities that we need to either be reporting against as CFOs or auditing against as audit bodies. So there is some resourcing challenges that I think are a significant element in the ability of, certainly at the ministry level, entities being able to come out of the arrears. Once you're current, it's a lot easier to stay current, but once there's an arrear, it puts potentially at stake the ability of other audits to continue to prioritize the historic ones, has been an observation. But I'd invite the Auditor General, if there are particular points that have been raised about those that are in arrears, because certainly the conversations, both at the CFO level and at the ministry level, is that there is a resourcing issue that will arise once you're in an arrears position, and it makes it harder to bring yourself current.
And I have to say, I understand that. I mean, I think what I was looking for assurances here that the Deputy Governor is actively involved in this process to try and stay on things and drive some of this, because some of them are, we learned this morning, 5-6 years out, since you've seen the public, and indeed this body here has seen any financial information coming up from a couple of these entities. So it is concerning, and just seeking assurances that he is involved in this process and in trying to drive forward, the conclusion.
Thank you, Mr. Chair, for that follow-up. I can assure you that the Deputy Governor is very much involved, not just at the ministry level, but in communication and conversations with the Audit Office. I can understand the angst of the public in terms of receiving the information that will provide that independent validation that things are well. There is regular reporting coming from every single entity across the public service. On a monthly basis, we are getting reports from ministries, both consolidated and individually supplied by CFOs on the state of financial affairs. That is something that has recently been, by the Ministry of Finance, not only produced in terms of the results, but the timeliness of those results is also closely monitored and submitted. So we have performance indicators, as it were, about whether CFOs are meeting their reporting obligations, and chief officers are being accountable for ensuring that that happens. So we do have other ways of looking at financial reporting that is not going to be influenced by the same sort of resource challenges. That their regular reporting is visible that way, and Cabinet has sight of it. But we are engaged and having discussions about how even resourcing might be resolved, and I know that that this is a priority for the ministry. I can tell you that it's a constant conversation with the Deputy Governor and the chief officers that are affected, and the ministries that are affected. We understand the impact that would have on incoming ministers who find themselves inheriting ministries that are impacted by this. But where the issues are due to resourcing, our attention then is focused on how we can be creatively a part of the solution to resolve those constraints.
And one specific, a ministry like Ministry of Health, do they now have a full-time CFO? Their own dedicated resource?
Thank you. The Ministry of Health has, in terms of the CFO appointment, and I'll ask the FS if he can confirm this, but the backlog of accounts would, the year that that's been impacted certainly predates the election. It certainly predates the now chief officer, previously the CFO, her ascension to going into the ministry. So resourcing wasn't an issue at the CFO level. We have 2 months under law to receive financial support, the financial filings, and to turn around the audits from what is now, I see, 50 entities. It is a huge task, and while there are many approaches that have been taken, one significant one being the not awaiting the deadline in the audit process beginning even earlier, with ministries going into interim audits in order to meet these deadlines. So we spend months ahead of the statutory deadline. The ministries and audit office have already commenced the audit process. So it's not an issue of resourcing on the ministry side in terms of making the submission. It's about the very constrained timeline of 2 months being able to contend with that volume of audits. And I believe that the constraint has been largely on getting through that number of entities that are current, while also dealing with the backlogs of many years of what is now just a handful of entities. And that has certainly been my understanding. And every update, we are assured that the ministries are supplying the information, are continuing to engage in the process that would allow the backlog to be resolved. But there are resourcing challenges in how much time they're able to give to the backlog they're able to receive in resolving that backlog, because you go straight into the next audit cycle where current ministries and agencies will again receive priority.
I guess, and what you said, it does give me pause for concern, because if I understand what you're saying, then what hope is there then of ever catching up? If I phrased it right, if it's what's it going to take then to get them caught up with getting these audits completed? Because vast majority don't seem to have the issue, and particularly I single it one because it seems to me from the information we have, it's the one that's most seriously in arrears, although there are others that are in arrears by a few years.
Mr. Chairman, thank you for that question. You may recall that in the recent past, there were other large ministries, I think of the Ministry of Education, that had significant backlog. And there was concerted effort for that audit to be completed on all sides. And the Ministry of Education, once it unblocked that particular year, the others all fell into place, as it were. As soon as I'm very comfortable, sir, that once we get through the backlog of that year, then we are able to bring forward very quickly the adjustments that would be needed, and they could be reflected in the successive years. But getting the getting the time that's required for that to happen on both sides is going to be crucial to that happening. There has to be a dedicated stream to focus on the backlog, just as there has been a dedicated strategy to contend with the growing number of entities that require on audits. I have seen such a proposal come forward. I understand that this proposal significantly enhances the wherewithal of the audit office to meet with what has been a tremendous increase. You know, we've talked about the implications of these changes, but one of the bodies that has been hit hardest by the growing number of entities and the complexity that came out of the last election has been the audit office. And when we're talking about the performance that has been achieved, sir, it has been no small task for these 43 audits to have come across the finish line in the record time that they have. In years gone past, the number of audits that were completed within the statutory time frame were much fewer. And the results far more problematic in terms of the outcomes of those audits. With the improvement in the performance of financial accounting that's happening within the ministries, and the strategy that has been put in place, and the resourcing that has been in place by the audit office, we're getting these across the line. And I have seen and supported in the office of the Auditor General a strategy that would allow us to focus dedicated resources to backlog without compromising the maintenance of ongoing audits for the vast majority of entities that are current. But I think the concern has always been you couldn't compromise the gains you had made across all those other entities in order to dedicate resources to bringing one or two backlogged ones up to date. So what I've seen in place now will allow us to deal with both of those concurrently, and the Deputy Governor will ensure, working closely with the Audit Office, that if there are issues that have been identified on the performance of a ministry to fulfill that, then those will be addressed. But that certainly hasn't been, to my knowledge, raised as a concern or a significant factor in why those backlog ones have not yet been brought current.
Okay, we turn then to the next area of questioning, and that is the tabling of annual reports. And for that, I'll turn it over to that line of questioning. Will be led by Mr. Isaac Rankin.
Thank you, Mr. Chairman. Thank Ms. Macfield for attending today. Ms. Macfield, under the Public Management Finance Act, public bodies are required to lay their annual reports that contains the financial statements and audit opinions in the Parliament via Cabinet no later than 5 months after the end of the year. This is, in a sense, a very pivotal step that completes the accountability chain. But in even though there has been recent improvements, there is still room for more improvement, as there continue to be delays in tabling the financial statements and the associated annual reports. It is not the first time it's been recommended, and the first was made in the performance audit report improving financial accountability and transparency in May 2021, and the implementation date for that was May 2022. What do you think are the reasons for the current delays in the tabling of the financial reports?
Through you, Mr. Chairman, and I thank the honorable member for his question. I'd like to begin by just acknowledging that we have had significant progress in this area. The report itself refers to the fact that the Auditor General is reporting that public bodies are now routinely preparing annual reports to accompany their financial statements, and laying the annual reports in Parliament is improved in both 2020 and 2019 financial years. What we have experienced was that 2021 created significant change that impacted the timeliness of delivering certain information, such as the annual reports to Parliament. It is as a result of factors we have discussed on just numerous times today, and I know that it's been raised by myself as well as the Financial Secretary. While we have had a number of reports, annual reports that have been tabled in Parliament, there are a number of them which were in the process of receiving sign-off by new boards. In many cases, these would be boards who were not in place at the time of the activities themselves were being delivered. It may be subject to being produced by policy advisors who were not in place at the time that those services were being delivered within ministries. It will be in various stages of being considered and improved in caucus and in cabinet, and in various stages, I suspect, sir, that you will see just in the meeting to begin in December that a lot of this is a timing issue, and with this meeting of Parliament, the reports that have been sent down here and will have an opportunity to now be tabled will show that this work has very much taken place, and that significant numbers are in the process of being filed. But there are, because of the changes that took place, there would be a number of approving bodies from boards, policy officers, caucus, cabinet, who would be looking at that information for the first time, having not been there, and I am sure that that had contributed to some of the delay. There would have been ministries that would be required to do multiple reports because of the change in the ministry that took place mid-year, and so the volume of reports that they would have to prepare would also have been increased. And so I'm sure that these have all been factors. While I regret that it was not done in time for this report, with this upcoming meeting of Parliament, there will be the opportunity to demonstrate that the work has been done, and the meeting of Parliament will give them an opportunity to be finalized, because they're also subject to the meetings of Parliament.
Thank you, Ms. Nixon. I don't have any follow-up on that one, but I would then move on to the quality of annual reports. And my question to you then is, why is it taking so long to get decent performance information into annual reports, given that this recommendation was made by the Auditor General 4 years ago, where she's recommended to government that they should ensure that all annual reports provide an assessment of performance against outputs and outcomes that are agreed in budget documents, and then to include any explanation on any variances. This, again, was another repeat recommendation.
Through you, Mr. Chairman, and I thank the honourable member for his question. I know that a number of entities do indeed report their account for their activities in terms of the delivery of outputs, and do their endeavor best to link this to outcomes. members of Parliament will be no doubt familiar with the challenges that arise from reporting on outputs. It was such a significant challenge that Parliament itself agreed with the support of both the Ministry of Finance and the Audit Office, that we were moving away from that as a basis of auditing on outputs because of the difficulties that that would pose and had posed for being able to do so reliably. Where ministries and portfolios build cabinet on the basis of their outputs, that management information is far more available. Others will have to compile that information as it may not be something that they may have other measures that are ones that they rely upon for performance indicators. And so I think that in those ministries, there is significant information that's provided, but not a common approach to linking it to their outputs. So it is a point of emphasis. On the latter point, though, about doing so to outcomes, ministries and public bodies will attempt to make those links, but in the absence of that overarching framework on how we are managing to outcomes, which is a piece of work that is ongoing now with the Ministry of Finance and supported with the participation of all ministries, policy advisors, we will have a better framework in place about how we would consistently report against our activities on an outcome basis. So there is a significant piece of work, sir, that is ongoing here that will improve our capacity to do so. And we will certainly, the Deputy Governor has emphasized and will continue to emphasize this as a matter of review, and we will also, in the preparation of annual reports for successive years, seek to incorporate that as a review when they are coming in on whether a reasonable effort has been made to reflect their activities in the outputs that have been prepared and submitted to Parliament as part of their budgeting framework. But I suspect for many entities, the management tools to reliably record those, if they are not actually a part of the basis upon which they're not sufficiently tied to their operational reporting framework, they may not have the same level of information, but they will have other key reporting indicators that are no doubt forming part of their annual report in lieu. So we will work with them to link those back to the output structure, but measuring the amount of effort that is put into that at the same time as the reporting frameworks are being reformed as led by the Ministry of Finance. I think with that structure in place, we will have a more enduring approach to how we report against performance on an outcome basis. And so I think the amount of management investments in building robust output basis of performance may need to be measured in the interim. So I would say that more can be done, but an outcome basis of reporting is the ultimate goal, and that is currently being developed.
Thank you, Ms. Nixon.
Okay, we come now to the final area of questioning, and that's the Sister Islands Affordable Housing Development Corporation. And for that, I'll ask Ms. Connolly to lead with that.
Thank you, Mr. Chairman. Through you to our witness. The Sister Islands Affordable Housing Development Corporation did not meet its objectives of building or selling houses in 2019 or 2020. Its primary objective is to promote affordable home ownership for the Caymanian public in the Sister Islands. In the 2020 General Report, the Auditor General recommended that the government considers the need for the Sister Islands Affordable Housing Development Corporation to continue as a separate entity. This recommendation was repeated in the 2021 General Report. My question is, what is your view on the Sister Islands Affordable Housing Development Corporation continuing to operate as a separate entity given the lack of value provided to the public?
Thank you, Mr. Chairman. Through you to the honorable member. In looking at the Auditor General's report about the continuation of the Sister Islands development entity continuing, this is very much a policy decision that is to be taken by the government. I'm not even sure if this particular structure has dedicated staffing that's underneath it. It is, these entities have boards that are established, and the ways under which the government seek to pursue the policy objective of providing affordable housing is very much a policy decision for the government to take. We will support and as efficiently as possible deliver against those decisions, but I don't believe, certainly not as acting deputy governor, it is not an area in which I have great exposure to in my substantive position as chief of the portfolio of the civil service. So I don't know that I would be providing a particularly informed opinion. So I don't think it would be appropriate for me to comment on that.
Through you, Mr. Chairman, to the witness, thank you so much for that. I have just one last question here. What is the process then for holding public bodies to account for meeting their objectives and delivering the goods and services for which they receive budgets?
Through you, Mr. Chairman, to the honorable member. So the public servants are held to account for the fulfillment of their budget objectives. This is achieved by way of the reporting that goes to ministers, that allows them to be able to be funded for their operations. It goes to the reporting in terms of whether services are regularly and reliably received by the public. And so whenever there is issues of non-performance in the fulfillment of our functions and mandates as public bodies, we have many arenas in which that accountability is made known. Whenever a government department is experiencing issues, one only needs to turn to any media or blog to see the first line indication that this is not happening. And we have had a consistent focus on ensuring that we are delivering our services and have been steadily improving that. We seek customer feedback on the delivery of our services. We give every customer the opportunity to report on how well we are doing so in their engagement in the way that we deliver our services. And we are reporting to ministers on the delivery of their priorities. There's room that we have noted for more consistently reporting against our key objectives, and so that the comparisons to what we're doing is visible across ministries, ultimately to the public, but also so that we will have a better way of understanding the work that's taking place and the way that work is complementary to the outcomes that are sought at a cabinet level. That work is currently underway in the improved reporting frameworks that are in development with consultation with chief officers from the Office of the Deputy Governor. This need was highlighted when you had ministers having dual ministries and realizing that while they were getting information, there could be significant difference in the way that reporting on performance was handled from one ministry to the next. And so it gave us an opportunity to streamline and create a common framework for how we would report against our deliverables to the minister, but also being able to provide that reporting to central forums such as our chief officers meeting, and ultimately will no doubt aid in the way that ministries are able to report again as well in their annual reports. So at that fundamental level, the Office of the Deputy Governor is putting in preliminary work that would allow chief officers to report against the ministers and government's priorities, both in terms of their strategic projects, but also the areas that are their core service deliverables. And this is the interim provision that will then build onto when we have a framework for reporting against outcomes. So there is work that's underway that's allowing us to improve the way that we report and to make sure that there's greater commonality in the way that entities, civil service entities, are reporting. And I think that will have the ability to benefit us in other areas outside of our core civil service responsibilities in the way that reporting can be done, and will hopefully provide a tool as the outcome-based reporting model is being contemplated. We can look at the work that is being produced out of the Office of the Deputy Governor on reporting to ministers now, because that is already underway to improve and create common ways of reporting our delivery of services to the minister, who ultimately signs off on the funding for operational expenses.
Thank you, Ms. Matfield-Nixon, and we really appreciate all of your answers today, and your responses were great. We're happy with that. So thank you.
Members of the committee, and that brings us now to the end of this hearing for today. Ms. Matfield-Nixon, I want to again thank you too for coming today. Thank you for your answers and responses in which you provided to us this afternoon. I do appreciate it, and wish you a very pleasant day, and we'll excuse you now from the committee.
Thank you, Mr. Chairman. It's always a privilege to be able to come down here, and I hope I've been able to provide some answers to the suitable answers to the questions that have been asked. I would just like to say my sincere thanks to the PAC. We're always very nervous when we come down here. We understand the importance of this committee in improving governance and performance within the civil service and public service. And so while it is nerve-wracking, it is always a distinct privilege to be able to be here and and we do commit, sir, to continuing in the areas where the Auditor General's office has identified we have not had sufficient pace, to continuing in the engagement so that our performance will continue to improve year over year.
And that's what we're all about, driving change and continuous improvement. So I thank you for that as well. Okay, so we can consider the meeting today now is now brought to an end. And I'm not sure when next we do meet, but there'll be much to be said, I think, about notices and stuff to go out. So I'm told January the 11th. So thank you all, everyone. Have a pleasant afternoon. See you soon.